If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream. Good morning, everybody. Happy, not Friday, Thursday to you. I'm used to saying Friday for these NFP report days. We are here for the big jobs report number. We're going to be talking about what is going on with the the state of the U.S. jobs market. Given that today is the 2nd of July, we'll be taking a look at June's numbers today. That's how that's going to work. The first Friday, or usually in this case, they pulled it one day forward, reports the previous month's jobs data. Now, what is at stake here? What could potentially happen in the scenario that you get a very strong jobs report today or a very weak jobs report today? I think that if NFP, what we are looking for today is verse forecasts. How do we come in? If the non-farm payroll number comes in way higher than expected, what does that do to markets? Now, there's some people who are probably a little bit experienced already who are like, well, obviously a stronger NFP, that's stronger dollar, weaker for gold, etc. And what if we get a really weak NFP? Then obviously we flip around. It's, in that case, stronger for gold and weaker for the dollar. But more importantly, beyond just that simple side of things, is there the potential that a really strong or really weak jobs report seriously gets things moving, not for the next 10 minutes or 15 minutes, but for the next day or week or a couple of weeks? Could a really strong jobs report derail the markets a little bit? Let me explain what I mean by that. The central bank in the United States is expected to hold interest rates for a while with the slight prospect of maybe hiking interest rates by the end of the year. That's kind of what sentiment around central bank land in terms of US is looking like. You can kind of make that evidently clear by taking a look at the 2-year yield. The 2-year yield is not blinking. It is continuing to say the Fed might have to hike rates this year. Now, you might not agree with that. You might think, no, I don't think they're going to hike. I don't think they can hike. They're all this and that. I'm just telling you that the bond market thinks that they might. If you get a jobs report today that is very strong, here's your test of the day. If you get a strong jobs report, does that start to show this type of move or this type of move in the 2-year yield? And if you're a gold trader or a currency trader, don't worry, we will extrapolate things out to those other areas. Stay with me. The answer is, if you are seeing a strong jobs report today, the 2-year yield is probably moving higher. Why? Well, if jobs are strong, the Fed will not feel a pinch to cut rates. The jobs, the Federal Reserve, at the end of the day, they're trying to keep people employed and also keep prices under control. If people are employed, one of the things, or let's say people are losing jobs, if there's a lot of people losing jobs, the Fed may choose to reduce interest rates to try and help people out, right? Lowering interest rates makes it easier for companies to hire people. It makes consumers go out and spend money easier. That gets things going. But what if we don't need help with the jobs market? I'm not positing that. I'm saying what if, right? What if the jobs market today shows flying colors, as it has, by the way, for the last few days? Also, stay tuned on this. I am so excited about this new indicator that we just built.
We've been working on this for the last few weeks. We finally got it ready. I'll talk about that in a second, but let's stay on topic here today because we do have a lot to cover and I want to get into some charts before we get into non-farm payroll. Okay, so the last three in a row, guys, the last three jobs reports in a row have been stellar beats for the U.S. economy. You wonder why the dollar's been so strong? Look no further than the last 3 months of non-farm payroll being rock star for the U.S. versus expectations, right? Jobs have been solid. Now, I know people say, oh, it's all fake numbers and, you know, I don't believe it, not in Trump's economy, et cetera. People get all sorts of emotional about the jobs report. I get it. There's mistrust of the jobs report. I'm not saying you're invalid if you have those concerns, but the market is trading off of it, which tells me most likely it's evident of an economy or a jobs report that is generally upticking. It's better than expected, right? Because otherwise, if the market knew better, then it would not believe these numbers. But it seems to be generally believing the trajectory of the jobs market, which is better than expected recently. The question today becomes, are we going to continue to see that trend? Are we going to see a beat in jobs numbers? I believe that we're expecting 115 today. Someone correct me in the chat if I'm wrong, but I believe we are looking at 115,000 jobs expected to be added to the U.S. economy. If you get a, let's call it a 150 or a 170 or a 180, that's strong dollar. That's another win for the jobs market pickup. But if you get, for example, a 75, if you get a 60K, if you get a 50K, the market's not going to like that, right? Well, it depends which market. The gold market will love it. The dollar would not like it. Stocks might be okay on this end of the spectrum, to be honest. I think the jobs market being a little softer, the stock market would just kind of shrug to that. They'd be like, okay, cool, we're going to get some rate cuts. I think actually, this is my personal opinion, I think the stock market doesn't love the upper echelon here. They don't love 175,000 jobs added because that means the Fed's not going to cut rates. It means they're going to potentially hike rates, right? So the jobs market is really sensitive for a lot of stuff here today. So whether you are trading gold, the dollar, S&P, NQ, whatever you're trading, this is really critical stuff because the dollar is also poised for a possible breakout. If you do get that 175K jobs added, if you get the big beat today in jobs, the dollar very well could be headed on up to that 102 plus territory. And that puts pressure on everything else. It puts pressure on gold. It puts pressure on stocks, right? So that's where I'm saying if you get a very, very solid jobs number, rates moving higher, dollar moving higher could put some negative pressure on equities. So if you're a stock market person, that is what you're watching for. Is you're watching for a lukewarm jobs report is probably advantageous to stock traders. So if you're looking at higher stock prices, if you're looking at, you know, NQ rallying, you probably want the jobs report to come in at like 110, right? Or 115, 120. You want something that's not too, you want Goldilocks, right? Not too hot, not too cold. Exactly what the stock market would like. Now, if you get very weak jobs report numbers, the stock market might be willing to be like, okay, hey, we're still going to get rate cuts, right? The stock market's weird. It like wants its medicine. It wants to get sick so it can have its medicine. Sometimes it is a little bizarre in that regard with rate cut stuff. Anyways, focusing on gold, we are sitting at a major level of resistance here. I do have a small short position that I did decide to take yesterday. I kind of am open to whatever happens with gold. If we rally higher, I actually like some of these levels a lot better for short opportunities and would not mind if I get stopped out. It's like, okay, cool. I can actually get into the trades that I'm more interested in, which is a pullback on some of these fib levels to the 61.8, etc. So I really like this level if it wants to come into play. 4,200, give or take, on the spot gold price is something that I'm potentially interested in looking at selling. Although I do have, like I said, a small short position here. If it continues to move lower, I'm not complaining, but I wouldn't mind if we move higher either. I'm pretty agnostic to what happens with gold price, though I am generally bearish and still think that the downtrend can persist. If I'm wrong on that, of course, I'll adjust. I'll, cut out the trades that I'm in if need be. but I do think that we have potential downside in gold. But anything can happen on the non-farm payroll number. Like this thing could launch to the upside, and if that happens, then might give me a chance to actually get the trade that I want even more, anyways. So dollar index, like I said, sitting at major resistance. If you're a dollar bull and we get a bit of softness on the jobs market data, maybe you're starting to look at it like 100.5 or 100. These are round numbers that are pretty big, significant levels looking left. If you're a currency trader, if you're watching euro, dollar, etc., that's of course going to be the mirror image of what's going on here in the DXY pretty much. So you're looking at euro, dollar, some critical levels here. If you sell through the lows, that's obviously very strong for the bears. And if you are looking at a rally up to 115, I think the sellers are still in control of most US dollar currency pairs. Here's pound dollar. Actually, I did not see this yet, hitting my level here. I'm going to keep an eye on pound dollar today. I don't have a willingness to short it right now. At least I believe Edgefinder has got me on the neutral side of things for... hold on, let me check it. I need to just make sure that this is still the case, but I believe pound dollar is actually a neutral read for me. Okay, so it's a -4. So I'm keeping an eye on it. If we get a really strong jobs report today, I may be looking at some dollar longs in certain areas, but just going to keep an open mind to it. Let's see, what else do we have? Guys, we've got just a few minutes to go here before the non-farm payroll number drops. Let me get it pulled up here. We're gonna try our new economic calendar I've been building. Let's see what we've got here. Yeah, we'll give this a shot today. So check me out. We've been working on an economic calendar here on the site. I like the idea of having it all in one, like having your price moves next to your data releases. I think that's really nice. So we're building some tools for that with the help of some of the trading view indicators, etc. So we can keep this open as we get closer and come back to it. So let's see, VIX is a little flat today. Oil is lower. Look at oil. Oil cannot catch a bid here. I actually think if this thing keeps going lower, I'm going to look at some, from a longer term perspective, looking at some individual energy stocks. I think that when you get oil just tanking off a cliff like this, at some point, I think you either come into the context of like, okay, if you're coming back down to pre-war levels, if you think we're going into a recession, then obviously I think you can go lower. But if you don't think we're going into a recession, which is right now, I don't think we are, I think most likely there's some demand around the corner, despite what's going on in the Middle East, like kind of cooling off. That's my opinion on it. Anyways, Bitcoin's catching a little bit of a bid today, back above the $60,000 mark. I still, I would like to see some strength come into this chart. I also have mentioned when it comes to oil, I'm interested in longs if and only if, from a short-term trading perspective, I'm interested in longs if you start to put in some kind of a bottom. But right now, there's no sign of it, and I'm glad I haven't touched any longs on this, because look at how, this is just a tough chart to try and be long right now. Silver, I do like the idea of a rally up into this 63.50 level. I do still have, for the time being, a overview on, let me just double check. Yeah, gold is still getting a -6 reading. Is silver getting a stronger or weaker reading? Silver's getting the same, -6. So Edgefinder has been really persistently bearish on gold. I'm sticking with this idea until something changes. If today's non-farm payroll number comes in way worse than expected, that would be something that I'm like, okay, maybe I need to cool on the bearish setups for gold. By the way, don't go anywhere after the spike. A lot of times the viewers drop right off afterwards. Don't leave, because after is when things get interesting. That's when we actually talk about trade ideas that we're looking at taking. So stick around with me. We've got here in just a second the non-farm payroll number. Let me just check. Yeah, we're about to hit the non-farm payroll number. Let's see if it auto loads. I don't even know if this is going to populate automatically or not, but we will see. It says it's did something. Let's see. Immediately, stocks are moving higher here. Gold is also moving higher. That's going to tell me we might have just had a soft print in jobs numbers. Not yet updated. Let's see. Maybe we need to refresh the page. But yeah, gold and silver both launching higher here today. Look at this. Gold 15-minute chart, whoo, going up. That tells me something came in soft for the dollar. Where are we at? Okay, well, huge miss. 57K. Ooh, 57K jobs added to the US economy. That is significantly lower than expected. Just get rid of that for now. That doesn't seem to be loading correctly. Anyways, we've got gold jolting higher here. Huge push up. That's definitely challenging my current trade here. Like I said, I wouldn't mind actually if this gets stopped out. I mentioned taking a small trade here. If we can get a move up to like 4,200, actually, like I said, I like that level a lot more. So I'm kind of open to it. If we're talking about stocks, this is, like I said, this is probably a number that the stock market is probably okay with. The stock market's going to look at this and say yields are going to move lower, right? There's yields moving lower, right? You've got yields dropping. That's basically evidence of they may not choose to cut or hike rates. So a softer jobs print. And let me also, I'm just going to check this out. Let's see where we're at with this. 57K and 129K. So they revised the previous number down as well. So that is a softer print, guys. What is the diamond in the rough here, though, is that unemployment rate actually ticked lower to 4.2% versus 4.3% expected. So it's not all bad. I would say it's a softer print on the non-farm number, but the unemployment rate coming down, that is a little bit solid here. So dollar is lower. Going back to our thesis here, does this give us the pullback opportunity in the dollar long idea? That is the question. The question is also, do we still want to take it given a little bit of a weaker jobs print? And I would say that if I'm looking at the dollar, so this is going to update in the next 15 minutes or so. So this jobs report's going to come in weaker than expected. Unemployment rate, however, so this is going to go red. This is going to go blue. So in actuality, that's going to kind of even out. So the dollar reading is going to get slightly weaker on this report today. So I'm probably going to stick to neutral for now, actually, on dollar. I'll have to check back in a little bit, but I believe that's how that scoring will adjust. So I'm going to have to come back to this and take a closer look at dollar index. I do still, from a technical analysis perspective, think you have strength for the dollar around potentially 100.5 and 100. I would say that if the bulls are going to hold it, that's probably the area that they try. So we'll have to watch that. But a little bit of dollar weakness finally coming in here. Gold, like I said, jolting up 2% today. If you're watching gold here, you've got one more level here of resistance that I'm looking at around the, what is this? The 4,120 level, let's call it. We'll see if that holds. If it doesn't, then I'm going to stop out of this position, probably reset for this week. And then if we get a move up to 4,200, that may be a spot where I look at fresh sells. But of course, if I do take that position, I'll share it in Discord. I may need to reevaluate whether or not I want to be short gold still after some of these numbers. So that automatically will update with an asset scorecard in a few minutes here. So going to keep an eye on that. Anyways, we'll bring in now to the conversation Mr. Chris Pulver to take a look at what is going on in markets. Hey, Chris, how's it going, man?
What's up, dude? Happy non-farm early day.
I know, and happy 4th of July to you, a little early.
Yes, exactly.
You doing anything fun for the holiday?
We are possibly going up to a little cabin this weekend and just hanging out with some elevation and some sun, but no fireworks out here in Utah. We just had like a 60 to 80,000 acre forest fire that just blazed through like Park City area or just outside of that, like Beaver, Beaver, Utah. So yeah, no fireworks. It's fine. Just
well, a little peace
nice
and quiet
weekend. Exactly. Just soak it all in with a little peace and quiet.
Yeah.
Chris,
so this non-farm payroll number came in way weaker than expected, breaking the 3 in a row that we had previously that were stronger. Dollar has been on a heater. We've talked a lot about that on the channel. Gold has been taking the heat from this dollar strength recently, but reversing course a little bit here. Do you think that this jobs report has any, I pointed out earlier for equities, looking at S&P, for example, this is kind of what they want. They want the rate cut, or I'm sorry, they want the rate hike story to get slashed. That seems to be like one of the bigger contention points for equities right now. Do you think, do you agree with that?
I do. I think, if you look at the watch tool right now, it really is like a one and done forecast for the Fed watch tool. And I still don't even believe that. I think this is, well, I guess it's just changed a little bit from yesterday. So this is showing a, rate hike in September, slightly higher, but just by a sliver of, this is like 3% difference for, Q1 of next year. I honestly, I keep making the argument where right now I think that the Fed is doing the classic jawboning where they're trying to get a lot of free mileage out of what they're saying, which is we're going to talk hawkish, but they are probably begging the labor market to cool off a little bit, and probably for inflation to start ticking lower. I just saw this morning on Trueflation. This isn't a big change, but like a 1.81 to 1.85. Now it's 1.75. If this continues lower, July 14th is our CPI print. I feel like if there's a little bit of heads up on this Trueflation data, that we might see the BLS number go lower. And again, it's like, I think that's exactly what the Fed wants, is to talk the market down and try to get the bond yields to cooperate a little bit. I think there's more pressure on the for Kevin Warsh and the new Fed regime. They're getting more pressure from the bond market than they are in equities. Equities, I mean, we're priced at crazy highs, but this is not something you want to fight. AI is all in. Did you see that Anthropic is offering like 5% to the government, essentially, to give back like profits to the government, or give it a 5% stake? It's like, you're going to see more and more of this from these AI companies, because it's like Congress right now, it's being treated poorly. Like it's a negative lens for AI because it's taking jobs. Even though we could have an entire boom of a whole new industry getting created from it. It's like the main source of building right now. It's the main source of construction. But a lot of data centers are getting like paused, and communities are kind of uprising because of it. So it's a whole context of populist narrative right now. That's, I think AI is just, it is what it is. It's like, it's not going to stop. But I think the optics of like, hey, let's give the government a stake, and then they can say, look, everyone, just trade the stock market because you have an investment in AI, and this is what we're doing. But anyway, to what we see the Fed do, I don't think the Fed wants to raise rates. I really don't. I think the markets haven't really crushed the Fed on, hey, we're going to be really, really firm on inflation, because I don't think that they are. I still think that Kevin Warsh may be a dove in hawk's clothing type thing, because we started off this like firm regime of like, we're going to do everything we can to fight inflation. But if inflation goes down, they don't have to do much. They can hold rates the same and start looking to cut maybe early next year. But I don't want to see the economy run hot either, dude. I really don't. I think that's too much. I think that gets us to a bubble faster. Where we are on the technicals right now, we need a pullback. We still need a pullback, dude. So let's get something. This is wedge bound right now. This is S&P. Thoughts on this, Nick? Little wedge right now.
Mm-hmm.
Do we poke the highs with some momentum behind that, or do we poke the highs and have a summer range?
So I'm going to probably take the latter. I still think that. Okay, so just to go a little further with the technicals, I think we can keep an eye on the chart that maybe matters the most, which is the semiconductors one. We always talk about it. Semis had been in this like pain-free, rally for some time. And I say pain-free for the bulls. The bears probably hated that, right? There's just an unbelievable one-directional move. I think you've started to see some chatter here on some of the semis world. And I think it's natural, Chris. I think, we're seeing headlines. I don't know if you saw this, but China posted, or Apple posted yesterday, that they're contemplating getting some of their memory and chip needs from China, because again, they're having to raise their prices. Micron being a provider to Apple, like you have all this situation where this is what happened with gold last year. I think semiconductors now, Chris, are like gold 6 months ago, because what's happening is you have this whole like real world effect of semiconductors getting super expensive. And, now you have Meta. I don't know if you saw Meta's news yesterday. I thought this was pretty
they want to become like AWS now.
Yeah. And let's think about this, right? So I heard someone explain it from a very bearish perspective. So context is important here. Okay. One of the Tasty guys was explaining how this is actually a super bearish signal for Meta, because Meta is coming out and saying, he gave, this is Tim Knight from Tasty. I want to give credit where it's due.
He's Perma-Bear.
Perma-Bear.
Yeah.
Perma-Bear. But sometimes listening to the Perma-Bears is you can get something from it.
Sure.
He pointed out that it's sort of like it's sort of like if Chipotle came out and said, we make tacos, but now we're going to make it so that we sell ingredients to making tacos. They would immediately draw the suspicion of like, well, why aren't you just selling the tacos? If you're making the AI in house here, if you buying all this AI stuff, why are you now turning around and saying we have AI for everyone if you want to use our stuff? And it's an interesting take, because we saw this also with SpaceX, right? So SpaceX moved lower on that news, and because the idea is like XAI is also doing the same thing. So is this a trend? Is there a trend where some of these AI providers are sort of turning around and being like, okay, we have a glut of supply, and now offering it out to the marketplace? I don't know. It's an interesting.
I think it's because there's demand. I
Yeah.
mean, it puts Meta in a better light, where it's like, look, what's insatiable demand, what's finite supply, and if hyperscalers, instead of having to spend, it's like if they can produce another revenue source. Like, this doesn't make me bullish on Meta, but it is encouraging to see that Mag 7, which has been rotating pretty aggressively out of favor, we caught a really nice bid at this 618 pullback. I mean, you take the March low, the June high, 618 pullback. It's had 3-4 days in a row. Like, that's not a bad look for Mags. And so if now,
I was going to say, I think if you ask me where we go with the market itself, my opinion right now is I think we rotate. That's like kind of more my dynamic, is like Magnificent Seven, healthcare names, energy names. I think you have the semis, I think, have room to chill out for a little bit and, kind of play that game of like, is there enough demand? Is there not enough demand, et cetera? Like, play that game for a little while.
Sure.
In the meantime, there's some really nice rebounds happening due to the Strait of Hormuz stuff kind of coming to a close. I think consumer discretionary could do well. Another area I was looking at is consumer communication services have been getting hit real hard. You look at like Netflix, and you have all the telecom stuff has been down. And so I think like there's a lot of areas here that I think could potentially see a rotation into, and maybe gold catches a little bit of a bid here. Chris, do you have any thoughts on commodities like oil and gold? I mean, oil's been getting nailed here. How much further are we going on oil? Well, what do you think here?
I think we possibly overshoot on oil. It's hard. So here's my thoughts on being long oil. I think eventually with the disruption we did see in the Strait of Hormuz, I mean, clearly the $200 oil bulls, you're wrong, right? I mean, and even now it's like all the people that were on that bandwagon of like, this is broken, it's going to be $200 oil. It wasn't. And what did they not account for? The whole world tapping into strategic supply. So our SPR, China's SPR, and then every country now is like, we're going to build our own SPR. Like, there's countries in Europe that are like, we're going to start limiting exports or halting exports so we can just build up our own inventory. And so to get things back online, I think there is a bid in here for oil. I don't know if it's a great all-in trade. I think energy in general is a better trade than just oil, because I think we need all the energy, period. Like, we need to have the coal, the nuclear, the gas, the fracking, everything. But
nuclear has been getting nailed too, Chris.
I know.
Is there some value there? That's another one.
Well, sure, but it's like I wish. I mean, I guess it's not even say like, oh, just buy XLE, because this is really weighted in like ExxonMobil and Chevron essentially, right? So I'm in this. I mean, I have XLE, I have XOP, I have XLU, XLI, XLB. Like, I'm trading some of these sectors that I think would benefit from, like, look, if we're going to have right now, it seems like the physical world is becoming more and more important, more and more valuable. So, it wasn't that long ago, Nick, we were talking about all rare earth minerals. That narrative it's probably still out there. It's just,
I agree.
Now it's like the physical side of like, who has the most commodities?
Yeah.
Period. It's like, so it is, I think that becomes it's not the new currency necessarily, but it's like, if you want your own supply of currency, or if you want your own supply of commodities, whatever it is, get your hands on everything. Like, that becomes a new race. And so I'm, one thing, this is one that I am trading. So DBC, which I had a pretty good run on. I took some profit. This would have been the highs in April. So that like March rip to April, May run, I was in here in basically at $22, and we broke this alert at 30. I mean, I know that's not a huge move compared to semiconductors, but for a little commodity based move, That's a 43% move. Like I took profit and I'm looking now to like scale back in. We're back at the moving average. If this is a let's and I don't think it even is done, but if this is a 1, 2, this either comes back for a flat pattern and I want to get long again in the low 20s, but this could be a pretty simple trade to get back to like mid 40s or 50s if we see like a commodity boom where it's like the scarcity, the need of all things energy, the need of all things commodities, and the value in which they hold. Because if it's harder and harder to make them, or everyone is just bidding them up, I do think that maybe something like DBC, FTGC, some of these other tickers could do pretty well. It's just, but it's not a sexy trade, and that's okay for 2026 because I'm telling you, man, like I am so fine rotating out of a 700% mover like SanDisk, or rotating out of a Micron that's up 200 and some percent for the year. It's like, I know there's still room for those to maybe run, but it terrifies me that if they don't, they're crazy expensive with super high premium. And if you don't trade to find risk, you're just going to be a bag holder. Like, that was a terrible trade. I missed the 2 month. I missed the 2 month FOMO, and it didn't have any follow through. And now what do I do? Right.
Well, and yet with commodities, it can get real sketchy real quick in both directions. Check this out, Chris. I've got something for you. I took notes on what you were just saying, and this is what I took away from it. So, Chris, for audience members who may not know Chris, the channel, by the way, Chris, has been exploding. We've had a ton of growth on the YouTube channel recently.
Love it.
So we have 1,200 people watching the stream between everywhere. So thank you guys for being here. If you're enjoying it, hit the thumbs up button, subscribe. This is my friend Chris Pulver. We've been doing live streams together for years together. We watch markets. We are completely market junkies, stare at the stuff all the time and love it. So if you're enjoying this, if this is helpful to you, make sure to subscribe to both this channel and go check out Chris Pulver. So check this out. Chris, you made some points I thought were super interesting takeaways. Last few years, the market has been plagued with tariff worries, or the Iran situation, the NATO tensions between Trump and obviously all the NATO allies.
Everybody.
Russia, Ukraine continues to be a thing. This prompted me to think about this, and I was like, maybe we call what you're explaining here the self-reliance trade. This concept of like, we've been this very globalist, society, global, trade reliance on one another. As dark of a thought as it is, I think you're probably right about countries wanting to have their own oil, countries wanting to have access to their own commodities. There is a AI race between the West and the East, and they're gobbling up as much as they can in terms of raw commodities, to your point. So it made me think, what is a winner in the self-reliance trade? Well, in the self-reliance trade, probably physical goods, probably physical things. So where does that take us? Well, maybe it takes us to, like you're talking about, some of the infrastructure companies, but maybe it also takes us to some international places. Chris, you and I have been watching, areas like Brazil and various international equities might be interesting, especially commodity heavy economies. Might be an interesting spot to keep an eye on. And of course, it also brings you to the commodities trade itself. You had the, was that DBC? Is that what it is?
Here's my list. DBC. FTGC. Those are commodity based ETFs, and then I also did add more shares to EWZ, which is Brazil, and ILF, which is Latin America. If we are disrupting our trade deal with Mexico, Canada, that will probably favor Central America, South America as well, which is the ILF trade. Brazil has more potential upside, but it's also singular, like just Brazil. But I think between those two, ILF and EWZ, there's like 60 to 100+% upside. On the commodity side, if you look at FTGC and the one I just showed, DBC, look left. And this is, again, this isn't going to be something that's like, Chris called this on July 2nd and we're up in a month. It's like, this trade might be a slow burn of like 6 to 12 months. But dude, if I buy some at 27 and more at 20 or 22, and we get up to, let's say, 37. I know that doesn't seem like a lot, but from a percentage standpoint, if we hit this area, that's 37%. Again, not excited about that. But if we get back to 22, now we're talking 60+% upside. There's not a lot of stocks I can look at right now in the U.S. stock market and say, this looks like a good 60% rally from here, because we're already sitting at all-time highs in semiconductors. Mag 7's been beat up and kind of out of favor. A little bit of rotation. You might be begging for value to pop up in the S&P, but it's like RSP maybe. if we have real rotation, maybe RSP, just because it can, I mean, this is equal weight S&P, it can outperform. It actually is outperforming year to date, which is interesting. But if Mag 7 catches a bid, RSP will get a backseat and be, collecting dust again. But if this is where I'm starting to, I don't think this is necessarily defense, because this is still somewhat correlated. But like, to me, in the next 6 to 12 months, I'd rather test the waters here and kind of ride this out, because I think there's way less crash potential on something like this, as opposed to, it's like all or nothing on semiconductors. It's all or nothing on the AI trade. I feel like the rotation can be like, I don't think I messaged you on this on Discord, but basically this first half of the year has been the AI chase. The second half of the year is, does that chase continue, or do we have one of the most glamorous rotations we have seen in a long, long time? Because
and
the deleveraging,
I think I lean more to the second, Chris. I think like, the semi, and maybe I'm wrong.
Hard rotation, you're saying?
Yeah, like I think so, because I think that the AI, excitement, enthusiasm, I'm not necessarily saying I think that's done and over with in the next 2 or 3 years. I think it could keep going, but I think you probably have some resets along the way if it's going to be a healthy longevity based, if AI is going to be a 5-10 year story, not like a 3 to 5 year story. I think you probably want to see some rotation, some healthy, you need the picks and shovels buyers to still be able to be buying. And if the rotation doesn't happen, I do think that concentration risk becomes increasingly problematic for the overall market. It's
also very high volatility. Like if you look at the IV rank on everything, like SMH, I'll look at it right now. SMH, give me the names. Give me these names, and I'll type them in. So SMH IV rank is 87.9. Okay. It's extremely high. We're talking about like the sweet spots, like 40 to 60, right? Indexes are like usually 20. This is 87.9. Micron is 84.
Huge. Yeah.
Let's go.
AMD.
HPE is 51. AMD is 93. AVGO, that's down to 37. That had a break after earnings. But yeah, AMD hit all-time highs recently this week, 93.6. What else? Let's go SanDisk. SanDisk and Western Digital, 89.8. Western Digital, 96.2. Those IV ranks are so high. If you are not trading to find risk, you are putting a ton of money on them. Like, I mean, just looking at a call option on SanDisk, for crying out loud, which was the best performing stock the first half of the year, we're 89.9. Let's say we want to go out. Let's do like, kind of a classic tasty, like I'll do 45-day window, even though this would be a call option. But if you want to buy a call, let's say an at the money call out 50 days. I mean, dude, you're paying $36,000 for an at the money call. Like, that's insane. And if you want to buy a put, you're paying $35,000.
Well, and Chris, remember what happened in Goldland right before it started ending?
It was doing the same thing. Super high IV, and it was expensive to buy puts. It was expensive to buy calls.
I remember you were on stream. We were talking about it. You were exploring. You're like, what can I do with gold? And you're like, I can't do anything here. The premiums are so insane.
Yep.
Chris, let me show off this indicator that I sent.
Yeah, please do. I saw
it in
that
the group.
yesterday.
Man, so I'm so excited for this. We found some really good, reliable data sources and APIs to build out some of our options tools, and it is pretty sick. So check this out. This is the new net options volume flow. So what we did is options flow is like really jolty. Like you get all sorts of like daily options volume. It can look like this, right? It can look really messy. So what we did is we averaged it with a 5-day and a 20-day moving average. We took the difference of the two, and we built this thing. There's 4 key signals that this sort of chart can show you. And here's what they are. The first one is when you see a very sharp rise in options volume flow over a really short period of time. That is a really decisively, bullish move in a particular direction. The second one is obviously the opposite, when you have a very sharp decline. So we're looking at S&P 500 here, but we also have gold in here. So I think this is actually especially interesting with gold recently, because gold has been incredibly bearish. Like crowd sentiment has been insanely bearish. So that brings me to another signal here, is when you get really, really stretched one way or the other, sentiment. And by the way, Chris, we actually do have the data. We haven't built the tool yet, but I just realized we have the data for SMH and for a whole bunch of ETFs too on this.
Nice.
So that would be really useful to look at. in relation to our conversation. But at the meantime, we'll take a look at some of the high level indices and commodities. So when we get really overextended, that tells you crowd sentiment is getting really one side of the boat on an idea. And then obviously when you have a steep drop off suddenly, like this, for example, was a very bearish signal when you went kind of bulls are in control to suddenly a quick, swift take by the bears. So there's like 4 different scenarios here, and using this sort of tool, there's never a holy grail, but when you're looking at a price movement, this is sort of like being able to confirm, to use like volume, for example. If something is trending up, but then you see like the options volume is starting to pick up with it, that's a confirming idea. If something's been trending and options volume is off the charts one direction, that might tell you you may be getting closer to a reversal because sentiment is reaching extremes. So it's a really simple tool, but I think that, you know, we've mapped out something here that's easy to read, easy to look at, regardless of what you are looking at. We also have dollar in here, for example, which I thought was interesting recently. Dollar sentiment has been, you know, was really negative, and then we rode that sentiment shift. Dollar went extremely bullish for weeks on end, and now seems to actually be kind of normalizing. Now we're actually seeing some sentiment flip bearish on dollar here recently. So, you know, kind of interesting to see that coinciding with the drop off in dollar. By the way, just a quick plug on this. The Edge Finder sale is still going on. Everything is currently 40% off. And for live stream viewers who are watching right now, we're currently offering 45% off. We'll drop a link here in the live stream chat to where you can get access, speak directly to a member of our team if you need setting up a payment plan, etc. We are offering that as well. But we've had a lot of people taking a look at the tools here, and I hope that you know, I hope they're helpful to you. A lot of people have been sending positive messages this morning about the new tool, so that's really exciting. Last thing I'll say here on sentiment, Chris, just because we do it every week. Interesting little reversal here in the AAII Investor Sentiment Survey. Last week, we looked at this and we said, hey, bulls are starting to get confident. Now it flipped back to bears are the wall of worries building up again.
Yeah, I don't know where that really, that's a big jump. I don't really know where that came from. One thing if we had, you know, Trump very vocal that we had another flare up in the Middle East, but it seemed, look, oil prices are lower, inflation's dropping a little bit. Trump's not talking Iran much. There's still a memorandum of understanding showing both sides want this thing just to be over and done with and put a pin in it. I'm not really sure where that jump came from. I'm really not, unless it's the, I don't know, it's just the worry of like, oh, the Fed's going to hike rates and affordability, but I don't know. It depends on what that sentiment, like if AI is leaning more, kind of like the University of Michigan sentiment. I actually listened to a session yesterday that, so we know that the University of Michigan sentiment has been like the lowest ever reading. And somebody said, well, right, but that's not really the way I'm reading it. It's more like I want to read the direction of it more so than the actual number, because things change, like from COVID to the great financial crisis. Like those numbers don't necessarily show the truth. Like things are not worse right now than they were back during COVID, and they're certainly not worse than they were back in the great financial crisis. People think there is. I mean, there's certainly a K-shaped economy. There's the affordability crisis, but it is not the great financial crisis. We do not have like just millions and millions of jobs gone. Right now, we are in the low hire, low fire. I think AI is trying to justify like, hey, look, we're here for productivity. We're here for a new industry. We're here for more explosion and expansion, as opposed to AI is just going to take everyone's, you know, lunch, and all of a sudden we're all worthless universal basic income needers, you know. But anyway, point is, yeah, that's a big jump for the bears, and that's kind of good. But it's like, are we going to climb this wall of worry? That's why I was asking before on the chart side, looking at SPX 500 and kind of prepping for the summer. I mean, July historically, you can also see this on Edge Finder, the 10-year average of seasonality. July is historically a pretty bullish month. I could see July giving us, you know, maybe a poke of recent highs if we're lucky to get to 76.20, but I think that maybe is short-lived and we have like a plus minus 3 to 5% move. June was a 5% drawdown that finished only 1% down, so along like wick to the south. And then August, September is my outlier weakness window. I think that because of maybe some midterm drama or something else that maybe pops up, maybe the Fed, right? So maybe the Fed is looking to, in fact, hike in September, and that percentage grows. But if that's the case, you know, maybe August, September with kind of that seasonality, you know, that's a pretty rough stretch. Is August, September, October, especially with some midterm drama. I'll throw one more thing. I know we have to go here in a second, but thoughts on if Trump and company, if the Republicans lose the midterms in kind of a blaze of glory, where it's like, let's say they lose the House and Senate, essentially, I hope there's not just Democrats who are like, we're gonna, repeal everything that Trump just did. Like, that's not good. The big beautiful bill, the tax breaks, like, that's not good. But it does make Trump kind of like a lame duck president. I also wonder if not only the commodity trade I talked about today, but the repatriation trades. You said self-reliance. The other word for that is repatriation.
Sure.
Countries like Japan, let's say that they pull a card from South Korea. If you had money in the U.S. markets riding NVIDIA and Mag 7 stocks for the last decade, and you can pull that money out tax-free and put it back in your home country and home index like the Nikkei, if Japan were to do something like that, I feel like we could face a pretty substantial sell-off in dollar yen. We're talking about these little, 100 pip intervention today. It's not big enough to move the needle yet. We're still at like the 40-year highs on the Japanese yen, right? Or like 40-year weaknesses. I don't hold your breath for the Japanese yen to do anything other than just what it's been doing, which is an intervention, cools off the speculation, but it's going to be bought and it's going to grind back up, and it's going to be bought and it's going to grind back up. It's going to keep hunting liquidity at the upside. Look, man, historically speaking, the dollar yen has been at 200 before. So 162 doesn't mean anything. It doesn't. But if it rolls over hard and we have like a 2024 event like we had in July, August 2024, the Nikkei, the S&P, the currency trade unraveling, I mean, is it one or two hikes away? Like, let's say the Fed does not hike, but the Bank of Japan still does. That could close that gap like you and I talked about before, which is like, look, this carry trade is negligible at this point. And if Japan wanted to repatriate and say, look, we're going to test waters because Trump company is no longer as powerful as it once was, like, I think other countries might test that, man. They might. And Japan is one of the largest foreign debt holders in the world. And if they start to peel that back and invest in themselves, I think that's good for the Nikkei. But I say that it's like, it is a wild, wild game with monetary policy and the Nikkei and what they'll do. But one thing they do have, and I didn't see this until last week, they don't have bloated private equity and over-leveraged private equity, and they don't have bloated and overweight households. So they're way more savings responsible, and they're benefiting from higher yields, even though the government is at 200+% debt to GDP. It doesn't have the same type of weight like we would have in the U.S. because we have a crazy leveraged private equity. We have private equity right now that's struggling essentially because it's like, oh, the deals of Blue Owl and Tricolor and all these other things that are potentially blown up in the private equity space. But it's not, $40 trillion. It's like $2 trillion. Right. So Japan is just built differently. And I think that if they wanted to flex on repatriation, I feel like that could send major waves throughout the entire world. And we'll see, man. It could be very disruptive. But I say all that because I did buy FXY. I put that in my pulver list yesterday. It's cheap. I bought a 2028 $57 call option for $450.
Nice. Well, it's like moving today, so you're.
Yeah, I mean, don't get me excited. It can turn in, if it turns into like a $2,000 to $3,000 winner, it's worth my risk, right? Like it's basically like a currency hedge, because if I wanted to, short the dollar yen, I'm going to be charged every single day to do it. But if I buy FXY and I'm kind of getting near that like top in dollar yen or bottom in Japanese yen in general, if the basket responds, like, yeah, that could pay pretty well, and I've got plenty of time in the trade. It wasn't that expensive. We'll see. But the futures market for Japanese yen was 6J. That only goes out like, I think, to the end of this year. And so FXY went out to 2028. So I took the big picture, like 900-day trade.
Well, there you go. Chris, I know you got to run, so I'll let you get out of here. Thanks for the conversation. That was good stuff. And we'll catch up with you soon.
All right, man. Happy 4th.
You too. See you, man.
See everybody.
Okay. So just some final thoughts on where we were just at with Chris. I do think, not to undermine how important this yen move is, if at some point Japan decides like they cannot justify not raising rates more aggressively, I think things get really interesting. And Chris's point about the US potentially, like, let me just show you. I've got so many things to show you guys, but if we look at really quick, we're going to look at economic data, go interest rates, interest rate projections here. So if Japan raises rates, and right now the bond market is sort of suggesting, here's the US in red, US is expected to potentially raise rates later this year. Let's say that doesn't happen. Let's say that instead the US actually keeps rates or maybe even cuts them a little bit. then what Chris is pointing out is this idea that if Japan sees a raise in rates while the US does not raise rates, the gap between the two here starts to narrow, right? And so if that narrow in the gap happens, what does that do to the currency exchange rate? Theoretically, that would make the dollar come down and the yen go up. And so that would possibly mean dollar yen has a larger reversal of some of its gains. I also find it really interesting that today's, some of the reversals taking place. Dollar index is down here, dollar yen down quite a bit. Gold is actually holding up okay. Silver's up 3.8%. So you are getting a pop here in some areas, but I'm going to definitely be keeping an eye. A lot of the Bank of Japan loves to play games in the non-farm payroll numbers. Like it's happened so many times in the past. You have the non-farm payroll number and they take that as an opportunity to dump dollars by yen. And maybe that's a little bit of what also took place here, as the dollar yen has a very outsized move going on, even compared to the other currencies. Euro dollar up today, pound dollar up today. You've got some moves happening. And look at this. We broke clean through on the pound dollar, that level of resistance. So maybe your next spot to watch would be the 1.3450 level or so. Euro dollar also a move up to 115 still seems possible, especially with a little bit of weakness in the jobs report here today. Just as a summary to finalize, and then we're going to throw the show over to our next show host, Mr. Miko Audu. Stay tuned on that. That's going to be a good show. We have got, in general, a weaker jobs print, a stronger unemployment rate. So sort of mixed there, but mostly the big miss in jobs numbers is dominating the headline and definitely dragging the dollar down here a little bit today. So perhaps dollar index is headed back to retests some critical levels here around 100.5 to 100. We've talked about this for a while. Seems like we might finally get that pullback in the dollar that we've been looking for. So, I'm going to keep an eye on it. And of course, if I take any trades, I'll share them in Discord. By the way, just a heads up, we are doing our Edge Finder summer sale right now. If you do not have a copy of Edge Finder and are looking for discounts, this is the lowest price that we're doing all year long. It is currently 45% off for stream viewers. Scan the QR code below my camera, or if it's easier for you, we'll drop a link in the live stream chat to where you can speak directly to a member of our support team. They can set you up with a payment plan if you need it. Some people like to split it up into 2 or 3 payments monthly to make it easier to afford at the current rate, whatever your budget is. We can help you out with that. Our support team is happy to help. Link is in the live stream chat or in the description down below of this show. Up next, guys, don't go anywhere. Miko is going to be taking a look at some more chart trading setups. He is a good mix of Forex, commodities, indices, etc. He takes a look at a little bit of everything and focuses on technical charts heavily. So stay tuned. We got some ideas coming in just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
All right, guys, hope everyone is doing well. Glad to be back. So as always, guys, if you have any markets you're interested in, time frames, if you have any positions you want to share or want my opinion, feel free to let me know. I'm more than happy to take a look, but I'm going to go through some markets I'm currently trading, some markets which I'm looking to trade. Of course, we've seen some interesting momentum now on some of the markets, particularly USD, which I'm kind of interested in. We can definitely take a deep dive into that, but of course, any other markets you're curious about, drop it in the chat. We can take a look. But yeah, to start things off, DXY taking a bit of a hit today. We're looking pretty bearish. Now, the question with dollar is, well, we've had a breakout recently, and essentially I'm looking to see if this breakout is the real deal. Now, is price generally breaking out to potentially continue, and we see a lot of momentum because, of course, we've been in at a pretty prolonged consolidation for the past 1 year, and it could be time for a breakout and a lot of follow through. And if that's the case, we could be seeing a lot of pullback opportunities, just basically following that momentum higher throughout July, maybe into August as well. If that breakout does come into fruition, I'm looking at price reaching around 103, 104. So there is a lot of upside room for the DXY. But with all that said, if we do come crashing back down, firmly back below this area, maybe it's not maybe the breakout doesn't really have legs to continue, and we might just fizzle out and start trading within the range again, and then dollar becomes a little bit more ambiguous. But yeah, we've seen some momentum. It's difficult to tell if we are just going to see some follow through, or we are still very much failing. But I'm looking at some areas to our left, particularly recent highs on the daily chart, to see how price reacts with that. We've just seen the momentum, so I'm not going to judge anything right now. I want to see probably over the next maybe 2-3 days to see what happens. Does price reject aggressively and come straight back up? That's a strong signal to say, okay, the buyers are entering the market again. Potentially we could very much see some continuation. Or does this momentum continue? Do we pull back and see more downside? That would be a bit more of a worrying sign. So I'm not going to be too judgmental with this bearish move here for USD. I'm still kind of 50-50 if it's a pullback or we are going to continue. So I'm going to formulate that bias probably over the next few days. I have been trading Euro USD. I've been quite busy intraday on that market. Managed to find a couple buy positions. One didn't play out too well. The other one did a little bit better. I had an intraday buy position on the 15-minute chart, but the volatility from the news release didn't do me too nicely there. We did take out the stop in that position before we rallied. Maybe I could have given myself a bit more room, but it was an intraday position. I'm trying to keep the risk and my stop loss pretty tight to kind of maximize the risk reward. I did have this entry yesterday. We had a very violent whipsaw kind of action, really aggressive sell-off, and a really strong recovery back above support. So I did enter there. This was basically trying to really take advantage of that move. So unfortunately that didn't play out, but this trade did manage to hit my target. Altogether I was slightly in profit because the risk reward is not humongous on this position here, but I'll tell you what the market gives me. But yeah, going into the later stages of the week for Euro USD, I'm still treating this as retracement. I haven't seen any convincing bullish momentum to say that, okay, we're about to reverse here. This is still very corrective the way price is moving, so I'll anticipate more of the same. And unless we see some really aggressive momentum step back in, and especially take out these highs over there, I'm going to lean a bit more bearish and expecting price to eventually do something like that. Again, if something changes, momentum steps up, we take out this high, yeah, I won't be bearish anymore at that point. But for now, I'm just going to be a little bit more patient, not so judgmental, not so bias driven. I'll kind of take advantage of more of a short-term outlook. Longer term, I'm kind of waiting for a bit more information. Pound USD has been pretty interesting as well. Really strong move, much stronger than Euro. Pound's been a lot stronger than Euro this week. So again, Pound USD reacting to support very, very well. Really nice bullish move. We still do have structure. You can see how price is moving. We've got these consistent lower highs, which price is pretty consistent with, and we haven't done anything to break that pattern. If price can hold this area, I do still like that location from a seller's perspective. I think that's a great place to be looking for shorts. Whether we get complete follow through back to lows, that's a different question, but I still think this is a smart place to be looking for selling opportunities, provided price reacts well. Now, if price was to break through this, yeah, I think for pound in general, I would just stay away, because we're just coming back into this range here, and it looks like we're just continuing fluctuating in between. So if we were to break structure there, I would say things get very, very choppy. Direction's not very clear. I would want to be patient with pound. If we can hold this zone, there could be some, especially on the lower time frames, some nice short opportunities. So I would keep that in mind. But yeah, if price was to break through that, I would say price action is a bit of a tough read at the moment. What's up, peeps? Okay, we can go through some requests. Gold, I'm seeing requested. What's up, CS? Welcome to the stream, my man. Hope you're doing good. Okay, we'll go through gold. I'm seeing a couple people request that. So gold's interesting. I say gold's interesting because we've respected support, and I'm actually wanting to buy gold. I'm looking for some bullish opportunities in gold. Gold and actually Euro USD were very similar in terms of the price action this week. Both of them have been very bearish. They've been selling off aggressively for the past couple of weeks. They're hitting some areas where potentially we're a bit oversold and we could be looking at some retracement. Euro is setting up a little bit tidier, so that's why I was trading Euro. But I do think gold now is setting up for some upside. Now, I'm not talking about anything crazy like a swing back to all-time highs. I mean, that could be the case, but I wouldn't necessarily predict that just yet. But you can see where we're trading with gold coming back into significant support. You know, this is really where our last kind of big swing developed from. You can see we're starting to slow down. The market is a little bit tired, and especially on the 4-hour chart, we had numerous attempts trying to break through support this week. So you can see price initially formed support once over here. We tried to break again, So you got those successive failed attempts, and now buys are starting to come into play. We're breaking through structure as well. So I do like gold to the upside, but I would be very cautious with targets. Like I said, I'm not looking to try and take this to the moon. I would say keep an eye on this area even. Now, could gold go past that? Absolutely. But I'd rather be safe than sorry, because again, the sellers are still in charge of this market, and you know, something like that could very much happen. But the way gold is shaping up now, taking out structure, you know, failing at support numerous times, it does look like we're seeing a shift, especially with the strength coming in. So gold going into the later stages of this week / next week, if we can see some retracement back to this zone, that would be absolutely fantastic, because this looks like a really safe place and sensible place to be looking for some pullback opportunities, especially if you're intraday and they're looking for that swing back into that zone. Now, of course, there's a lot of momentum in the market. We might just continue to fly to resistance there, but I would say it's a bit late to be buying gold right now. I mean, for me anyway. Of course, you could still profit from the move, but I like buying on pullbacks. I like price coming to me and then jumping into the position. So yeah, gold, I do think upside looks pretty good. Again, not betting on anything crazy here, just a bit more retracement, but I like the way we kind of formed this bottom, and we're seeing buyers step back in. Let me have a quick look at silver since we're on the topic. Silver, not as much. I mean, similar price action, failing at support multiple occasions. I'm not as in love with the price action as much in gold, just because we're really corrective on the way up. So again, the analysis kind of is kind of similar. We're very corrective on the way up. You know, I wouldn't be surprised if sellers still step back into the market and take us lower. So again, buys for silver, I'll keep it a bit more intraday, a bit more short and sweet until we see some real buyers step back in and, you know, and structure breaks. Then okay, we could be looking at maybe some more aggressive swing positions. But yeah, gold, I'm kind of expecting a bit more upside now. We can take a look at euro pound. Someone requested S&P earlier. We can take a look at that too. Euro GBP, not a market I've been focusing on too much, to be honest. So I mean, yeah, there's not a market I've been looking at too much this week, but of course pound's been a lot weaker. Pound's been a lot stronger, than euro. So a pretty big move there. Let me know what you're looking at for euro pound as well. You know, what's your bias for this one? But it does look like a pretty significant breakout. It does look like there is a lot of room for us to move into as well. So I kind of like that too. We've had this prolonged move to the upside, and it looks like price just simply run out of steam, and the sellers are coming back into the picture. So I would be looking at following that momentum really. Pretty clean and pretty sensible place for opportunities as well. If euro pound will be kind enough to pull back there, I think that's a smart place for a short. And keep it simple, back to lows, call it a day. Maybe you want to leave a small position to trail. Euro pound's not really the market where I'll be too aggressive with trading stops, to be honest, because it is notoriously very, very choppy. This type of market, I want to take my profit at highs, take my profit at lows, and run. I don't want to really be in the trade too long. It's just a very, very choppy market. So if you can get a push back to lows, yeah, that makes a lot of sense to me. So yeah, euro pound, I'll be leaning pretty bearish here. We've spent a long time in this consolidation. It looks like the bears have taken control, and I'll just be looking for the continuation of that momentum. The S&P 500, this one, okay, we're looking a little bit bullish. I discussed this one yesterday on my stream. I was talking about some intraday pullback opportunities from this zone back into the high. Did play out pretty well. Risk to reward might not have been fantastic on this idea, but the market structure made sense. Strong impulse back into a strong level of demand, very corrective move down. Clearly the buyers were the likely dominant participants here, and we have seen some follow through, but we are starting to struggle now. You can see we've got 1, 2, 3 highs there. The market is definitely finding it hard to break through that zone. Now, in terms of my kind of higher time frame bias for the S&P, I would still be pretty bullish, but it's just a bit awkward, I would say. I say it's awkward just because we're very flat. The conditions we are in here is very different to the conditions we were in over here. We're clearly seeing momentum, higher highs, higher lows. There's clear trend, conditions in this situation here. We're very choppy. So you don't want to get caught buying too high, and especially staying in the trade a little bit too long, because you could very much see price fail at highs and come back down into support, or consolidate a little bit more. We're not in that aggressive kind of just buy the dip sort of situation. So with that said, I would be very kind of conservative with my take profits. I wouldn't try and shoot for the moon just because I don't think conditions are optimal for that sort of trading. Now, I do think price will eventually get back to resistance and back to all-time highs. That's still very much my take for the S&P. How would I look to trade it? Now, I'm not really seeing any clear opportunities, to be honest. It's just really corrective and really choppy. I mean, maybe very intraday. Even intraday is very choppy. I mean, I like this idea here. That's a nice support zone. If price was to pull back into that, I could see a nice intraday move back into resistance. But again, I'll probably call it a day there. No need to try and push it further than that. And this is the 15-minute chart. So yeah, I'm not really seeing much opportunities, to be honest. It's really choppy. I am bullish, but I just don't really see a good buy there for the S&P. So hopefully that made sense. I'll go through, okay, I can take a look at the Japanese index as well. I can go through some more USD pairs too. I'm seeing dollar CAD requested. The JP225, very interesting situation here, because of course we have seen some volatility for the yen pairs recently. I do think there could be some really nice selling opportunities on the yen pairs. I do think a lot of them are really overextended and due some healthy pullbacks. Looking at the JP225, this is still pretty bullish, to be honest, and I wouldn't be surprised if we actually do push back to highs again. I'm not really seeing any convincing selling pressure coming to the market. Yes, we had this move here, but it's found support and we're doing a very, very good job at holding on to that. You can see numerous wicks into that zone, even seeing some nice rejection currently. So yeah, I would be looking at something like this here. Market structure looks really clean. Higher highs and higher lows are very consistent. Pullbacks are pretty consistent as well. Yeah, I don't see any downside opportunities of good quality. Now, if we were to break through this, especially a significant break, yeah, there could be some short-term sells to look into. I would agree, but again, even coming back into this area, I would be careful with those shorts. So yeah, a strong break of that, I do think some short-term sales make sense, but at the moment, if we can hold support, yeah, the buyers are still very much in control here. So yeah, still very much onwards and upwards, at least according to my analysis. USD CAD, this is interesting. USD CAD's interesting. I say that because where we're trading is just very, very high up, and the way dollar CAD moves, it loves to kind of swing, and it doesn't tend to just continue one direction for a very long time. Even when it does, it normally falls pretty hard too. So I like the situation we're in. Price is taking out some prior highs, so maybe some early sellers who would have been shorting as price achieved resistance again, maybe a bit underwater now, or maybe taken out a little bit early. And this could be a prime location to be looking for some downside. Now, of course, we're going to need to see a bit of CAD strength come into play. We're going to need to see a bit more USD weakness. So we'll see if that comes into play. But in terms of the technicals, in terms of where we're located, really, really nice place to be looking for some shorts. And I would expect to see a lot of momentum as well. I would be looking at price coming back into this sort of area here for dollar CAD. So yeah, I quite like the shorts. Now, if we do drop a bit more intraday to see if we're actually ready to start taking the shorts, I would be a bit more patient. Reason being, it does look like we're just forming a bit of a consolidation here. I think the key takeaway for dollar CAD right now is that we're failing to create new highs. It basically translating to, okay, momentum is failing. We're running out of that bullish steam. Perhaps we could be looking at some downside. But the biggest sign would just be a strong break to the downside, similar to what the DXY basically did, which was, consolidation, really strong move down. I would like to see something similar for dollar CAD, and we just haven't seen that quite yet. So if dollar CAD can give us some conviction lower to show us, okay, yeah, the sellers have stepped into the market, buyers have had their fun, then yeah, keep it simple. Pullbacks, more downside. And we've got this high over here. I'd say that's it's not close. The target is still quite far away, but I would expect, especially from a swing bias, to us to probably end up back at those at that particular level around 1.4, 1.39. So yeah, dollar CAD, I like the shorts, but not quite there yet. I want to see price break lower. Otherwise, we might just chop around here, and I could see us potentially doing that for the rest of the week. To be honest, if we don't have that kind of if we don't see strength right now, we might just kind of see less volatility until maybe the new week starts. But yeah, dollar CAD, I like the downside. Just not ready yet. And it's important that we do see the break. But yeah, I think the big question for me really is just what the dollar's going to do essentially, because is this a pullback or is price generally failing at highs? At the moment, I don't know. And over the years, to be honest, as I've grown as a trader, I've become less predictive, especially because I'm very technical based trader. I've become less predictive and more just reactive to what price is doing. Because you can have a bias, you can predict something, but at the end of the day, the prediction is not really what's going to secure you the profit. It's actually just reacting to what the market's giving. Because I could have a bias, which it could be completely wrong, but then I react to what price is doing, and then I potentially take advantage of that, and that there is what actually makes me the profit. So with the dollar right now, this generally could be a pullback, but I want more information. And really what I mean by that is to see more strength come back into the market. If this keeps falling strong, yeah, this might turn into something like that and a lower high forms. But again, we'll probably need a few days before we kind of get that answer. As for my focus for the rest of the week, to be honest, I'll probably take the rest of the week off, to be honest, just because my main plan this week was focusing on euro longs. Now that's kind of had its fun. I mean, there might still be a bit more upside. I probably will just rest the rest of the week and come back into the new week and see what type of price action we got, because I still think there's a lot of opportunity here. I'm looking at the higher time frames, and if euro generally does want to fall, we're coming back into this location here where we've been forming lower highs continuously. If euro does want to fall, I'm expecting at the very least for us to come back and test some structure here. I meant to do the month chart. Come back and test some structure here. So there is a pretty big drop to be had still. There's a pretty big drop to be had. Okay, I can finish off on New Zealand CAD. Absolutely. Actually, New Zealand CAD is a pair which I'm keeping an eye on. It hasn't actually reached the level which I want to trade from, so I'm not too focused on it just yet. But if we can go and tag this 0.81, 0.812 area, I'm interested for some sells. I'm basically just looking for the next lower high in the sequence and some downside that could take us back to support down here. I'm pretty bearish New Zealand CAD. We've seen this bullish structure for a while. It looks like it's tired out. We've seen a lot of momentum lower. We've taken out some lows here too, and I'm just looking to see if we can get that follow through lower. And looking at the higher time frames, we do have this steady decline, and I'm expecting us to return back to support again. Long term, I think we can break through that, but that's a topic of conversation for another time. That could take months. So yeah, New Zealand CAD, pretty short bias, and I'll keep a close eye on that zone there. But anyway, guys, we have run out of time. I do appreciate each and every one of you tuning to the stream, and if you have found it useful, feel free to check out my channel. The team have dropped the link to that, so feel free to check it out. But thanks again for having me on, guys. I hope you have a great rest of your week and a great weekend, and I'll see you all in the new week. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, everyone. Happy NFP Thursday. It's not a Friday, it's a Thursday, which is cool. We have a closed market tomorrow. So we're getting some action here on Thursday, and look at that dollar softening a lot there. As the NFP number comes in cooler than expected, that's going to promote the Fed to maybe not hike rates if the labor market's cooling. And so that's why you're seeing this softness into the dollar. One thing that was super, super interesting before the release is that we had yen weakening into the release. And then after the release, you can probably expect a little bit more of a continuation, probably into that 160 handle, I would say, is that next level of support. This was the original intervention zone, I would say, that everyone was mindful of, including myself. We broke above that here, and now we're going to, it seems like we're on track to tap into that level here. So maybe we'll see if buyers here are looking to step in. I think there's a good chance that potentially, especially going into tomorrow where you have lower liquidity, where, if they were to intervene, they get more bang for their buck. Maybe 160 doesn't hold and maybe get a deeper pullback here. I also saw some chatter about, let me find it for you guys, something about Japan, some officials there, and they were essentially hinting at some aggressive rate hikes. Now, I was listening to Nick and Chris Pulver's segment, and I absolutely agree that if you get an event where you have Japan raising interest rates, and then you have the Fed that is just not hiking rates, even if they just kind of stay flat here where we are right now, that could take away some of the appeal from the yen carry trade, and naturally, without intervention needed, drift dollar yen lower there. Now, you could also, on top of that, add a hint of intervention, and you could really see dollar yen flop to about 155. But I want to find the actual comment here because they were hinting at essentially some pretty aggressive rate hikes. I think they said every 6 months they intended to or were open to doing that. So let me see. Let me just type in 6 months. Okay. So Japan's, I'm not going to butcher that person's name, unfortunately, but BOJ should raise rates at a pace about every 6 months, once every 6 months, which would be a pace that won't hurt domestic investment. So that right there, that's some hawkish commentary. And so that's why we saw, the yen here getting some strength into the release. Now you have the NFP report that is coming in cooling. That's going to unwind some of those rate hike bets there. And then you can see dollar yen pushing lower. So interesting to see there. I did take a small stop position on my FTML prop firm account here. So you can see here how my stop right above the high. Now the risk reward, as you can see here, is not the best, but I am looking to see what happens at 160. And I do think that there is a world where you get a little bit of a deeper pullback. And in that case, the risk reward gets a little bit better. So for now, this is just a small attempt here to see what happens at this level. I do think that you have some broader, or not broader, you have a bigger opportunity if you do have a continuation of these rate hike unwinds in the US, added by hike bets in Japan for higher rates, added by a potential intervention because you do have a holiday tomorrow. So I'm going to take a small attempt on that. Now, another position that I took going into today was dollar switch to the short side, and that's actually working out as well too. So this is the same FCMO prop firm account. I have the same position on my live account as well. We are going down here, testing into this level of what could be support. So I'm going to turn this into green here. And then we'll see what happens. We'll see if buyers step in and really take control here. You're seeing the same kind of situation happening on the DXY. So DXY is failing and trading into this level of support here, this 100.5 handle. This was that original breakout level that we all were waiting for, right? We were trading in a big range here for DXY for about a year or so, more than a year. And now we are, we broke out of this level here and we are now retesting this level. So two things can happen. You can get the good old break and retest and continuation to the upside. Very, very possible. Or you could get the fake out. So it really depends what happens here. So I'm going to monitor this here closely. I'm going to monitor yields as well. Yields here are softer on the day, but not marginally anything crazy. You are seeing the US 2-year yield, though, down 1.44%. So interesting to see that as well. And one thing I will say, guys, here, as we're going forward, we did something very interesting yesterday. So for all of the viewers out there, I know we have some new viewers here as well. If you are looking to get the most out of your edge finder, right, this is the tool here that helps you find those good trade setups, including fundamentals and sentiment analysis. If you want to get the most out of that, or even if you are transitioning from a different strategy, right, we did a workshop yesterday morning. And we had some people that just wanted to learn more about fundamentals. They wanted to get a swing of things. They wanted to integrate it more into their strategy. Some people were coming from trading ICT or MCT, or I think it's ICT or SMC, one of the two. And they just wanted to explore the idea of trading with fundamentals. We hosted a workshop yesterday. We had a great turnaround. And, we were going over the edge finder and how to include fundamentals and all that good stuff. And I also shared this dollar switch trade idea. So if anyone there from the workshop yesterday got into this one with me as well, congratulations. But what I want to say is we are hosting a workshop on Friday as well, and we're going to be hosting a 2-week trial. That way you can, go along with me. We can look at the edge finder. We can see how we can extrapolate the best trade setups out of the edge finder. It is completely free for 2 weeks. So definitely go ahead and join. If you're looking to get into the swing of fundamentals, or you're trying to transition into macro trading, I think it would be really worthwhile for you to go ahead and join. We do it at 8 a.m. Eastern. So definitely take advantage of that. But one thing I saw yesterday too, when it comes to the edge finder on top setups page, I saw that the US dollar was actually removing some of the strength out of, or the edge finder was taking some of the strong score out of US dollar. I posted this into the Telegram yesterday as well, which was really, really interesting. So US dollar got 6 points knocked out of it yesterday. Dollar yen got 4 points knocked out of it yesterday as well, getting it into the neutral, which dollar yen, before yesterday was getting a bullish reading. So that's very interesting to see as well. And then the dollar crosses the counter to the dollar. You saw Aussie dollar get a bump of +5, pound dollar get a bump of +7. Silver got a rise in the score as well. So the edge finder was ahead of the curve here in catching this move here. So fantastic job by the edge finder. And I would imagine that once the new data points get into the edge finder, we get the NFP and all that good stuff integrated into the algorithm. I would imagine that the US dollar score drops even further. So very, very interesting to see what happens at these important levels of support. I'm going to be watching it very closely here. If we do get a fail of the DXY level of 100.5, I could see dollar index heading to 99, which is where that 200-day moving average goes. And then at that point, I would really reevaluate and see where the trend is for the longer term, the medium to longer term, because I do think that on a relative basis, The US might be one of the more restrictive central banks out of everyone. So we'll go ahead and see what happens there. But for now, I'm in a short-term dollar short positioning with the open idea to go ahead and flip positions if we get some good discounts on the US dollar. So that's kind of my stance there. Sorry, I went on a little bit of a tangent there. Good morning, Kier, Jeremy, KDX, Sluggy, Kier. How you guys doing, Simo? Good to see you guys. Oil longs seem very interesting to me. Honestly, are you looking at anything oil related? KDX, great question. So on the prop firm account this morning, I actually had a limit order that was about to get tapped into, but I canceled it out, so I didn't get filled into it. But you know what? I will say if we get more discounted levels, another reason why I actually took off the idea too is because the edge finder score dropped off. So it was once getting a bullish reading. From my understanding, it's no longer, as I checked this morning. But I think a good level, like somewhere around 64 to 60 area, I think could be a good level to go ahead and buy some oil. Maybe you get some of that seasonal demand in play, come back into the picture, and then you can trade it into the 200-day moving average or the upper end of this level here, which was the floor for the war was about 85-ish, I would say. This is where you found some support during the war. So maybe we can trade back up into this level here. But, you know, I really got discouraged as I saw the score on the edge finder. You can see here, it's getting a neutral reading of -2. So not the best, right? So unless something changes on that front, I'll kind of just hold off on oil. But you bring up a good point. It is at a very good level, good discounted level there. So I do like that, and I'll be monitoring that closely. Love that sell too. I'm in it. Max, what is up with you, Max? Max is always finding the sleeper pairs, and he does great, Max. So I'm glad to see that you're in the trade as well, Max. Congratulations. Yeah. Good initiative. Happy to chat about that too. Might be good for a beginner. Yeah. So I feel like a lot of people are interested in macro trading, but they just don't know how to get into it, or it seems kind of daunting. And I was telling the group yesterday, but like a lot of people actually think like a fundamentalist, they just don't know it yet. Like when you're trading macro, it's really just understanding where every economy is at the moment, and then plugging in or taking out variables that could influence the current state of that economy. And I kind of brought up the analogy of like the World Cup. Like I would assume a lot of you guys here are watching the World Cup, and you guys are have a favorite team in mind. And when you have a favorite team in mind, you know how that team plays. You know who their best player is. You know if they have a home court advantage. You know how everything works. And so if you have like a very important upcoming game, and then you have your star player get taken out of the game because he's injured, well, you can speculate that the performance of that team won't be as strong anymore. And it's the same thing with macro and different economies, right? You have a US, right? You can think of US as Portugal, right? We're firing on all cylinders. We're doing really well. But then you have your star player Ronaldo gets injured, and now you can see that the performance of that team will not be as strong as it was. Similar to this, right? This NFP report here came in cooler than expected. You're getting some softness in the dollar. Why? Well, some of the strength is, coming out of the US dollar now. You're seeing those rate hike bets get scaled off a little bit. And so it's the same kind of thinking. So that was kind of the analogy that I threw out yesterday, and it really resonated. So again, if you guys are looking to go ahead and incorporate fundamentals into your trading, go ahead and join the workshops. It's completely free for you guys to do so. And I hope it helps you out. But let's go ahead and see what Andre says here, or Andrea. DXY pulling back in GU shorts. Yeah, so if you're in GU shorts, I would really see what happens here at that 200-day moving average. That would be a level of resistance to be mindful of. We'll go ahead and see how big or how big those rate hike bets are scaled back by. I was looking at CME Fed Watch tool today. Let me see if anything has changed since then. But I know they scaled back from I think it's now December when it was originally October. But I think we still have one rate hike on the table. Yeah, one rate hike on the table here. So yeah, it's pretty much what's going on. We'll see. I'm very interested to see if Japan actually commits to those aggressive rate hikes. If you do, I could see a lot more pressure in dollar yen. And then ultimately, I would like to pick up dollar yen. 158 looks good. 155 looks good as well. But we'll go ahead and see what happens there. Max says, I was speaking about dollar Swiss, which would work, but got on a hedge on GU short, which got taken out. UJ closed due to rollover yesterday. Max is always maxing. That's a good way to put it, man. Yeah, Max is maxing. Use these dollar Swiss short, Swiss yen short, pound dollar short. What's Swiss yen doing? I didn't even think about that. Has good positive swap. The only one that has positive swap. Is it doing anything crazy? Not really. It's not really moving much, which I like to see, honestly, because that means that the Swiss franc is relatively strong, just like the yen. And that gives me more fuel for dollar Swiss. That gives me more conviction for dollar Swiss as well. So if the Swiss franc is equally as strong relative to the Japanese yen, and you do see some continued dollar softness there, I like dollar Swiss to the short side. So I'm going to continue with that trade. But yeah, good call there on Swiss yen. Let me go back to that chart here. I think if we were to see a break of this level here, that's your day moving average, I think what it would take is some actual intervention from BOJ. Let me see what Swiss yen score is looking like real quick here. Oh, I have the minors excluded. Oops. Let me just type it in. Swiss yen. It's getting a neutral reading of 4. Interesting. Let's look at CAD yen. I would imagine CAD yen's extremely weak. It's getting a neutral reading too. What? Let me look at the chart. CAD yen. What's CAD doing? It's all right. I guess because the dollar is getting weaker against everything, so that's helping these pairs here. Marco, how you doing, man?
Hello, doing pretty well. How are you?
Pretty good. We got some activity flowing. We had dollar yen drop before the release. Now after the release, it's continuing its fall. Seeing some broader softness in the dollar as well. I think we got a lot of stuff going on, a lot of opportunity.
Yeah, like do you think the dollar yen move is possible intervention, or do you think it's purely fundamental?
No, I don't think it was an intervention at all. Intervention move probably like an actual real heavy intervention move would have been like a 2 to 3% drop, like 300, 400, 500 pips or so. This was like 175, I think, or 150. It was leading up into the event, but what I saw, Marco, I think this is what it was. I think it was a combination of some profit taking. We can see here one of the Japan officials, I'm not going to butcher that guy's name or girl's name, but he said, or she said, the BOJ should raise rates at a pace about once every 6 months, which is pretty aggressive, I would say. And they have the ability to do so. And they also said moderate BOJ rate hikes are important to rectify excessive yen weakness. So it seems like their approach to solving the problem, which I would agree with, is not by intervention, because intervention is a very short-term solution and it doesn't really solve anything. I think if they really want to control this longer term, it's going to be through rate hikes. And so it seems like they are actively willing to do that. And so that's why you're seeing, or that's why I think we saw that big drop in dollar yen. And now just adding on to this non-farm payroll print that was cooler than expected, you did see rate traders pull back some of those rate hike bets as well. So those two things are a great combination for dollar yen to just naturally drift lower for now. But the big question is going to be, how big is the drift lower, right? Because it's not like they're going to rate hike tomorrow, right? So it doesn't really change anything fundamentally. So maybe they intervene to bring it down a little bit, and then they can start, hiking rates, like they say, in the cadence of once every 6 months, and maybe that can naturally just keep it lower. That it's kind of a tricky thing to navigate. But I will say this: I did go into dollar yen shorts here. Very briefly here, and I'm looking to see what happens at 160. If buyers step into it, then I'll move my stop to break even, and I'll just whatever. But I think this is a decent opportunity as far as you have those comments from the BOJ, you have softer NFP, which is cooling some of those rate hike bets, and then the possibility. This is speculation, of course, but the possibility of an intervention tomorrow, since it is a bank holiday, lower liquidity, they get more bang for their buck. So I think that's a cool little stab that I'll take here. Maybe we can get to 158. That'll be cool. Cool little win there. So yeah.
So you took it before the NFP or after the NFP?
Right after the NFP.
Okay, cool. And what about the dollar Swiss?
Dollar Swiss, I got into it before the NFP, and I think that the NFP number really helped it to the downside here. Yeah, we have this level of support, the 0.800 level. I'll see what happens here because DXY is also lined up at this 100.5. So this was the previous resistance here. So we broke out of it. So this could be a traditional break and retest and continuation to the upside or a fake out. So I'll monitor what happens here. If DXY catches a bid, then I would assume that, the broader dollar upward trend is still intact, and then I'll just take out dollar Swiss.
Yeah, you did remind me to just check my FTMO because I'm near the profit target. So just give me 1 second.
Oh,
With
nice,
FTMO, one of the problems I have is like some prop firms, they automatically close your positions when you hit the target, but on FTMO, that's not really the case. So let me see here. The equity is 109,181,000, or yeah. Basically, I'm still $800 away from the target. Okay, that's fine.
You should do what any wise person would do, Marco, and just full port one trade to get you across the finish line.
Yeah, you know what actually used to happen? So like way back in the day, we used to set profit targets to try and anticipate hitting the target, and then you would get spreads and commissions. So essentially, you would be like $5 away from the target. And then you would do a trade to try and get that $5 profit, but the trade would run against you. So instead of like gaining $5, you would lose 100. And I know some traders that like took, I don't know, maybe 5 losses in a row, so they lost like $600, and they were $5 from the target. So that was pretty funny. But you actually have trade copiers, modern trade copiers, that have an equity protection rule, where you set the equity amount where the copier closes all of the positions. Personally, I don't use it. I did use it in the past, but I don't use it at the moment. So that's kind of a help to get around that whole thing.
Yeah, I saw a meme the other day which reminded me of that's why I brought it up. But like, I guess it's a common problem or something. But it definitely is. Like, a lot of people gamify prop firms, but it was basically a meme or a skit of this guy that he was about to pass the prop firm. He was like a couple $100 away or whatever.
Okay.
He full ports the account, and then he just blew it. And then he was upset because he was right there. But yeah, man, bad habits in trading will catch up to you. And if it's a small little win that you need, I promise you that the market will humble you and take it all away from you.
Yeah, best to wait for a trade. I know it's like maybe $5, $10, $20 from the target, but just better to wait for a position and let your actual trade plan play out.
Flex Byler says he's literally $5 away on his maybe 20K. Bro, be patient. It's not worth it. It is not worth it. Just be patient.
That's a good
don't do it.
Picture.
Do not do it. Yeah, don't. Yeah, that's probably his face right now live. No, do not do it. Just be patient, man.
That's gonna be his face once he takes a trade and goes back to break even. So
no, hopefully not. Yeah, just be patient, man. $5 away.
Absolutely.
It'll come to you. It'll come to you. There's always another trade.
Absolutely. Okay, so yeah, dollar losing value. I think, well, the NFP was mixed. So the unemployment went down to 4.2, but the actual number was what, 40, 50K. So the number was lower, but the rate was better. So I would say a bit mixed. The market interpretation is dovish. So if we go to the Fed Watch tool, I haven't personally checked it, but let me put it on here. Let's go to
Cheers, I'm waiting. That's good, man. That's good.
Let's go to the Fed Watch tool.
Matthew, this Swiss yen scorecard, the score is 4 neutral for your trading there.
Yep. So it changed a little bit. I think this percentage went down and this one went up, but we're still betting, or traders are still betting for a rate hike by the end of 2026, maybe even 2 rate hikes. I would say that's completely unrealistic. I would say, like, even Warsh yesterday was a bit more dovish than the markets expected. That's why we had a little bit of a sell-off on the dollar even yesterday. So I think the story is building up that they're going to flip dovish sooner or later. It's all about, if you have positions on, like I have, like you have, it's all about will those positions survive? So will these positions survive the potential hawkish interpretation until the sort of the Fed actually flips dovish. So I would say that is the main question.
I have a personal opinion. I think that Warsh is not just Warsh, but the Fed in general. I don't think they're going to hike rates, man. I know that's what the probability is in, and I'm going against what the market's obviously telling you and pricing in. But I think that they are, in a way, playing it safe, trying to satisfy the bond market, not spook anyone out. But in the event that they get any sign, a clear sign that allows them to go ahead and flip and start cutting rates or just holding still, I think they're going to take that at whenever they get it.
Absolutely.
That's kind of my thought process. So, but we'll see. Because obviously my opinion doesn't matter, and it matters to what you're seeing in the bond market, yields, all that good stuff, and what the price action is actually telling you. But that's kind of my thought process of that. Because that's kind of what I got from the his panel. Was it yesterday that was a panel when he was talking?
Yep.
He was trying to hit at, like, inflation could be cooling off a little bit. Lagarde was saying the same thing, that they're going to be proactive, and if they're starting to see any sign of it, they're gonna start easing rates. So did Bailey. So I think that's kind of the approach they're gonna take.
Yeah, I mean, I absolutely agree. Like, the Fed always prefers to be dovish rather than hawkish. I mean, like, even the people at the Fed, I think they hold stocks. So even though they may not be biased, I still think they prefer to be dovish rather than hawkish. And hawkishness just kind of destroys the whole stock market and the whole risk on environment. Inflation should come down naturally. Like, oil is even lower than it was pre-war, so that's your energy going down, and that's your inflation going down. So I think they are just going to wait it out. The current rate is restrictive. You also have to think about that. So 350 to 375, that's actually considered pretty restrictive. And even if they keep it at this level, inflation should come down. And if they hike, it usually takes 12 months for a hike to get implemented into the actual economy. At that point in time, like, inflation is going to fall because of the falling oil price. There's no doubt about it. So I think a hike would only serve to establish some credibility, because they have been away from the 2% target for, like, I don't know, 4 or 5 years now. So if they want to, like, be cocky and establish credibility and piss off Trump, they can hike. But as far as fundamental reasons, there are none, as far as I can tell, and as far as people that are smarter than me can tell as well. Like, most of the guys that I'm following are dovish.
And I mean, the market's taking that. I mean, look, I'm just saying this out loud, but the dollar, right? It's clearly reacting to any sign of relief on the rate hike story. It's running with it. Dollar lower. I mean, look at the metals, man. Silver's up 4.7% today, which in the grand scheme of things is really nothing, but it's up 4.7%. Gold's here catching a little bit of a bump as well. The market's clearly, any sign of that relief from the rate hike story, they're going to take and run with it. That's kind of what I'm getting from this.
Yeah. And to be honest, like, this last period of a month and a half was super, I wouldn't say easy to trade, but kind of simple if you stripped it down. Like, the dot plot was supposed to be hawkish. The war speech was supposed to be, I mean, not hawkish, but we kind of we're expecting a hawkish event, because inflation was way above target and there was no sign of the Middle East stopping. And then after that, like, almost immediately after that, you got oil back to pre-war levels. You got the Middle East in the rearview mirror. And what else can the Fed do but to flip dovish from that point on? So you don't often get such simple periods, I would say. So I'm glad that we got it, and I'm glad that we're positioned correctly. I think this could be just the start, if I'm being honest. Like, the markets are still pricing in a hike.
What do you think about the lack of forward guidance? How do you think that's going to affect your trading?
Well, so the previous chairman, let's say Powell, they used to feed breadcrumbs. So they would say something, and if you did catch it, you could make a decent gain in the markets. Like Powell would say something here and there, but for Warsh, I think it's not gonna be the case. I think he's gonna keep the cards pretty close to his heart, and he's gonna try and remain, let's say, very, very, very neutral up until the actual meeting, and we are not even sure that there will be a meeting. So I would say things will change a little bit, but at the end of the day, I think it's just gonna be a similar situation. You have a new chairman, but the rest of the gang is the same. The dot plot, I believe, is just going to continue. I don't think that Kevin can completely remove the dot plot.
Okay. I asked that question because you mentioned something that I agree with, which is it seemed like the trading was a little bit easier, maybe because it's just the fact that remove all the noise, because they could say something in a meeting, and then if something happens 2 weeks later that can shift their judgment, the market's going to take that. So what I'm trying to get at here is like, it seems like we're back to trading the data, and the data is the way to go, right? And it makes it super clean and simple. And so up until Wednesday or yesterday, I forget what day it is, the trend was obvious, right? Dollar to the long side, euro dollar short, GU short, right? Now you're starting to see every pivot, the data starting to flip. And so like now you start to see it kind of move like that as well, where you're seeing the dollar start to fade off. And I feel like it's more clean, I would say.
Absolutely. And you know what? Like, I'm going to miss Trump. I mean, I know he's doing some really bad stuff in the background, but as a trader, I think we're never going to get such an entertaining president as Trump, and such a market mover, market manipulator. So I think it's going to be a lot more boring once he steps out. And I'm excited for the next 2 years. He has 2 years more, right?
Yeah.
I think it's going to be a fun 2 years. And then after that, I'm not sure who can step in and be so, let's say, crazy and funny and insider trading as Trump. It's not going to happen.
It was an interesting time, man. When the tariffs first came out, that was like crazy for me, like in a good way. Like I remember like I would be just fundamentally and technically bullish on like dollar CAD. I was like waiting for the breakout of position for it. This was like the first kind of week of everything happening. And then he vocalized his dislike for what's going on with the relationship from trade relationship. And then the tariffs happened. And I remember I would like put the trade on. I'd go fold some laundry. Like I remember visually like where I was doing. I would go fold some laundry, and I had my take profit like 250 pips away. And within like a couple minutes, it would hit. And then the move would retrace back. And technically, I'm back to my original price, right, where I wanted to get into it. So I would just fill it again. And then, 2 days later or whenever later, he would say it again. Yeah, I don't like them. I'm going to really hit him with the tariffs. And then again, another 250 pips like that. Like it was crazy. But I understand that I could have been on the opposite side of that. So it couldn't have been as fun. Absolutely. But lots of volatility, like you said. It's a crazy environment. I would say too, like if you are able to trade this environment, I think you're in good hands. Like if you can do it here, you can do it pretty much in most environments. So yeah, it's gonna be. We have 2 more years though, so it's 2 years is 2 years, right? So we still have some time to enjoy it.
I think so. So what do you think about gold? The bounce here.
Yeah.
Does that change your opinion?
This guy says, why gold go up? Let me answer that question for you. Gold has been, you can think of gold right now, the inverse of the dollar. And what I mean by that is when you have lower yields, lower rates, when the money printer's on, right, you don't get any yield for holding US dollar, you go into gold, right? It's a good store of value, it's a safe haven hedge as well. So it's a good thing to do. When you have the money printers stop and you have a restrictive central bank like what the Fed has said recently about hiking interest rates, and not even just the Fed, but globally, they raise their rates. And so you get more yield by parking money into the US dollar versus gold. And so you can kind of think of it like that. If you have a restrictive central bank, money is going to flow into the currency because it yields more. If you don't have a restrictive central bank and you have a loose policy, then money's going to go into gold because it's a good store of value, all that good stuff. And so that's what you're kind of seeing. So this whole time, right here, this candle is where the war started. The war started here and oil flew higher. And oil is a direct input to inflation. And so what basically the market was saying is if we have higher prices of oil, we're going to have higher inflation. And to fight the inflation, central banks around the world are going to have to hike interest rates. And so that's why you saw the price of gold going down. Now you're starting to see the price of oil softening back below these pre-war levels. And so the question becomes, are central banks going to start reducing policy like they were originally doing before the war happened? If you start to see that dynamic where central banks around the world are starting to get ready to turn on the money printers again, reduce their interest rates, then you will start to see gold start to drift back higher again, and it will thrive in that environment, which is printing money, lower interest rates, all that good stuff. So to answer your question, that's what's going on with gold.
And let me show you a chart. So I have a nice chart that goes well with this. Let's go to add to stage. So we go to gold. We invert gold. We click plus, USD CHF.
Mm-hmm.
No, that was wrong. Sorry. Just a second.
Sure. Let me answer these guys' questions too. So
here it is. So
okay, perfect.
essentially, look at this. Like, look at the correlation here from, let's say, October 25. Just inverse correlation, gold and USD Swiss. And you can see how closely gold has been moving with the dollar against the Swiss. And the Swiss is pretty flat. So you're basically trading the dollar if you're trading gold at the moment.
Mm-hmm.
Yeah, that's what I wanted to show you. So sorry for breaking your comment.
No. And so that kind of goes in hand. Like the correlation is very tight right now, right? Like you are, it's very like, it's very binary in the sense of dollar up, gold down, dollar up, right? Very simple like that. So to answer you guys' question too, Rafael and Shihara here, before I go ahead and pivot out, is the short idea in the euro dollar still there or not? Or is it a good time to buy gold? I think I don't know the answer to that for the medium to long term. However, I will say this, that right now you are at a moment where that decision is going to be a lot more clear. So if you see continued weakness in US data or inflation cooling, or for example, right now oil is lower. If you start to see, if you look at this chart for everyone that kind of wants to understand this and make this determination on your own, right? If the live stream is not on and we're not here and you want to understand the timing and stuff like that, if you see oil lower and the US 10-year yield lower as well, then that means that the market is saying that the money printers are coming on. If you start to see those things kind of pointing in that direction where you have oil lower, which it already is, yields lower, and the dollar softening, you start to see that happening consistently, then yes, it would be a wise time to buy gold and maybe short the US dollar. Until you see all those things start to line up, it's still up in the air whether it's a good time to buy or not. We're seeing oil lower, which is one of the things, but you still need to see yields lower and the dollar really start to softening up a little bit for you to justify to buy gold and swing trade that to the upside. So that's kind of how I would answer that question.
Yep, absolutely. I agree.
All right, Marco. Well, thank you so much, man. We're not going to be streaming tomorrow, which sucks, but this was a good NFP Thursday, and I look forward to talking to you next week.
Yeah, this was very fun, and let's see if the dollar goes down even more. So we'll see each other on Monday, and I wish you a great 4th of July and a great weekend as well.
Mm-hmm. One thing I would say, this question, I really want to address it, but then it's too late. No, it's not too late, right? Look. You would have thought it's too late after gold is right here, after a crazy run up right here, right? If you would have bought here, you would have said, well, it's too late. But then you see all of this would happen after that, right? When you're trading macro, trade the trend, trust it until it's over with, right? So that's what I would say. Ride the trend until it's over. But all right, Marco, take it easy, man.
Yep. See you on Monday. Goodbye.
Alrighty. Bye-bye.
Okay. So time for the individual segment. Let me remove this. Let's put it back where it was. My positioning at the moment, I'm short USD JPY. I almost got stopped out, so got a bit lucky. I don't know. The game plan was to look for an intervention. We didn't really get an intervention, but we got a fundamental shift, or a shift in the fundamentals, where the Fed will now be more dovish than people expect, while the Bank of Japan may hike rates more than people expect. So the interest rate differential the interest rate differential is getting narrower. Okay, if you look at, so let's take a look at carry trade scanner, USD JPY. So the divergence is getting smaller. The base rate is going down and the quote rate is going up. So the divergence is getting smaller, so there's less bullish demand for USD JPY. And that's why I think the whole fundamental story is flipping, and that is essentially causing the current drop. Now, if we get an intervention into this, it's going to be even better. I don't think that's going to happen because they would waste ammunition, which is stupid. So this may just fundamentally keep on melting lower. I hope it's not going to last too long because the swaps are very negative on this position. I'm in GPUSD. That is actually doing really well. So this position is crushing. By the way, if you want to join the A1 Discord, all of these trades were signals in the A1 Discord. So if you want to join, there's a link in the description and you can use the code Marco to get 25% off. Okay. And also, if you want to get the Edge Finder, so this software, there's a 45% off sale running right now. So Edge Finder is 45% off. Again, code is Marco. So if you want to arm yourself with the best tools, you can get the Edge Finder, you can join the A1 Discord, you can get all of these positions, and you can trade directly with us. As far as the Nikkei goes, I'm still looking for a potential buy position. Top setups, what can we see here? I'm looking for a bullish print on the Nikkei. Right now it's neutral with a score of -4. That is not good enough. So I'm going to have to be more patient as far as the Nikkei goes. But I'm happy with the positions that I'm running at the moment. Some position risk on. I'm seeing that the US stock market is going up. So the US stock market is pretty healthy. I'm doing some individual stocks that I'm forward testing. So I have Caterpillar. I'm actually out of Caterpillar, took profit. GH, this one is doing really well. BRKR, CGNX, doing okay. VNO, HIV. No, it's not that HIV. This is HIW. So I'm not sure how to exactly pronounce it, but that's not really the best ticker, I would say. Anyway, so stock market is up, S&P is up, which means I'm going to take some stabs on individual stocks, but that whole strategy is in forward testing. Most of my size, most of my exposure is in selling the US dollar. So UJ and GU, I mean, GU is just looks beautiful. You know, GU looks great. I took 50% off, I think, at 1.333, something like that. I took it a couple of hours ago. It was an alert in the A1 Discord, and now it's running even more. But I'm happy taking some profit off. You know, it helps with the psychology. It helps me to secure some profit, and then I can let the rest run. Use possibly a trailing stop loss. I think there's more steam in this move. I think there's more steam. I think the markets are still. I know that the markets are still pricing in hikes. That's crazy, I would say. Like the Fed, I think the chance of a rate hike is maybe 3-4%, and here it's 41.9. Or maybe you can add these two numbers. So the chance of a rate hike is massive. I don't think it's needed. Oil is pretty much back to pre-war levels. Inflation should naturally drop. So that's how I'm seeing this situation. Before I go, I do want to mention, if you guys are looking to get funded with Ola Prime, so there's a link in the description, Ola Prime, you can get 35% off with the code A1 Live. Okay, so Ola Prime 35% off, code A1 Live. They don't have a consistency rule, which is awesome. They have a pretty good trust pilot with a score of 4.6, which is pretty high if you look at the prop firm industry. And you get a great price. So if you're looking at FTMO, this is 35% cheaper with the code A1 Live. Okay. I have reached the end of my segment. Before I pass the stream to James, I want to wish you a happy 4th of July if you're celebrating. I'm in Europe, so I don't know what the hell 4th of July even is. But guys in the US, I wish you a happy 4th of July. To everyone else, I wish a great rest of the day and a great weekend. And I will see everyone on Monday. Okay, so let's see if we get some follow through on these positions. I'm still holding them. Thank you for watching. That's it for me. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello. Happy Thursday, ladies and gentlemen. Hope everyone is well. So we had US data today. There's been quite a few guests on before me, so I won't go over it too much. I'm sure you've heard enough about it. However, we have seen Edgefinder dropping off massively. Pound dollar, euro dollar, New Zealand US dollar, silver, actually silver's still there, gold, all dropped off, completely disappeared. Over the past, 1 to 2 weeks, we were seeing the dollar pairs very bearish, negative 13, 15 on euro dollar. I mean, all of them reading very bearish, and now they've all fallen off. So interesting signs. Now, could we buy gold? Maybe it's the time to buy some gold at cheap. What do you guys think? Are you bullish or bearish after today's news? Sluggy, hello. Alan says 4th of July, best holiday behind Christmas. Yeah, well, like Marco, I've got absolutely no idea what that is. Something about, is it independence or something? I don't know, man. It's just another excuse for you Americans to take a day off, eh? I'm only joking. In my opinion, although euro dollar is due for a pullback, but the ultimate direction is still to the downside. Sluggy, I do agree. I've still got my pending order on euro dollar at 1.15. I've not removed it. I'm just letting it go. If it hits and it doesn't work, it's cool. I've had a pretty good month last month, so I'm not going to really bother. I did take a small loss. I manually closed Euro Swiss for a little bit of a minor loss. It was like a 0.45% loss, and I'm out of my DAX position as well now. So overall, a good start to this month as well, but nothing overly eventful. I am considering buying gold, not yet. I'm still hesitant, but I think there's an argument too. So something we spoke about, it might be yesterday or the day before, I can't remember. But gold looks decent actually on the weekly time frame. So, if we look at gold on the H4, it looks, horrible, massive downside. Same thing on the daily time frame. It doesn't look good at all. But then we look at higher time frames like the weekly and monthly. And actually the downside we've had just looks like a reasonable pullback. It looks healthy. So I'm actually not that interested in being a seller. So I quite like the level that gold has come down to here on this weekly. We've got the RSI a little bit oversold. We're still in this bullish trend on the weekly as well. So I think there actually might be an argument. I'm not saying I am buying it yet, but I do quite like the idea of at least keeping it in consideration. Maybe something along these lines with a really tight stop just at this previous weekly low. And then, no necessary, maybe no take profit, just let a trailing stop type of approach. I think, like I said, maybe worth some consideration, especially now that gold has dropped off the edge finder and we've had some less than appealing or less than satisfactory data come out today, which is interesting, actually, because I was saying earlier this week that we had Hassett and Besson come out saying that they were expecting good jobs numbers, like very strong. And that didn't happen. So last time I'm listening to those people, luckily I wasn't trading off that information. Times short euro AUD again. So maybe not for me at the moment. My system says to wait now. Retail position is mixed. Interesting. So euro Aussie, I don't think I've got anything there. I know we were looking to be a buyer not too long ago, actually. It was back over here. So the old analysis was basically waiting for this resistance to break and looking for this fib pullback, which in hindsight would actually have worked quite well. But the problem is it just wasn't looking good on a fundamental side on the edge finder and things. So I had to just avoid it, which, right now, in hindsight, again, not the best idea, but it is what it is. So pound yen, getting a bullish reading. The US dollar is still bullish. But obviously, as traders, we look at relative strength. So relative to the other currencies, we're not really seeing the dollar do much. So yes, the dollar itself might be bullish, but there's not much else to pay attention to there. And the Dow is bullish as well. But we've seen a lot of the other markets drop off. So Bitcoin, the S&P, Nasdaq, Russell, they were all bullish as well, and they've dropped off. So actually, if we turn on neutral, let's see what the damage is. So dollar yen has come down to neutral. It's lost 1 point over the past 24 hours. CAD yen has dropped quite significantly as well. The DAX has dropped off back down to neutral. UK 100 was really dominant at one point. This had a score of 15. It's lost 11 points over the past 1 to 2 weeks. What else have we got? So dollar pairs, where have they gone? So euro dollar gained 4 points. So it's now -3 back to neutral. So yeah, this is what I'm saying. I've kind of lost my interest. Gold has also dropped back to neutral. So I don't think there's much for me to do today. It's very much a case of, we've got 7 readings, 4, 5, 6, 7. Yeah, seven readings. I don't really like any of them. Pound yen, maybe. Let's take a look at pound yen. I know we had some yen activity today. Dollar yen is down, so it might be an opportunity to buy dollar yen a bit cheaper. I'm not a fan of that idea either, though, because there's no technical setup. So to buy dollar yen, I would need to see one of two things. I might take an attempt to be a buyer. If we can revisit these highs, show a nice rejection, that would just be a break and retest, very simple. Or if we saw a bit of a deeper move back down towards the 200 moving average and then a continuation higher. Now, I'm not sure, excuse me, I'm not sure. Are the markets closed tomorrow for the 4th of July, even though it's actually only the 3rd of July? I'm not sure. If the markets are closed tomorrow, we might see another injection by the MOF just because of lower liquidity. That might be something to pay attention to. I'm not saying that is going to happen, but it wouldn't be surprising to me at all. And then, pound yen, as we said. Actually, this looks pretty good, to be honest. Again, I'm not going to get involved. I just do not really want to be involved with the yen at this moment. But technically speaking, this looks okay. So let's just see what we've got. It's not quite a fib pullback, actually, but we've just started this bullish trend here. So there might be an idea maybe next week once this market's established itself a bit more. At the moment, it's not there, but there's potential. Pound CAD. We can have a look at pound CAD. Where is that? Here. It's having a really nice move to the upside on the back of what I assume is the oil weakness we've been seeing. So almost completely filled the gap. In fact, actually, I think we have filled the gap on oil technically by basically a pip or point. But yeah, I've got no interest in trading really oil. So that kind of writes off the Canadian dollar for me as well. Let's see. I don't think there's anything on the edge finder for this market, but we can see pound CAD here. It's got a score of 2, but the pillars, so the 3 pillars, the economic growth, jobs market, and inflation are all neutral. So, excuse me, as a fundamental trader, there is nothing here for me. Trend-wise, it looks quite good. You know, you could make a very good argument to just follow the momentum here. So there might be more of an idea of actually just waiting really for a pullback and trying to just follow the trend rather than trying overly hard to align it with fundamentals that just don't exist right now. So obviously, you know, moving averages are all bullish. We've got really nice low over here and cleared the previous highs. The fib level lines up quite nicely with previous structure on the left. So yeah, I think some sort of maybe pullback and rejection makes sense. But again, it's not something for me. I just don't have enough things to warrant taking that trade. You think they're done with just one? What do you mean, one intervention? Or what? Or are you talking about the ECB hike? Flip on retail positioning on Euro Aussie should do it. Yeah, I don't know about retail positioning. I think it's loose. I think it's a good overall directional thing, but I don't really like to use it as a catalyst, to be honest. But obviously, each to their own. Everyone trades different ways. Anyway, what else do we have? So silver is still bearish, but again, I'm not really keen on trading silver right now, considering gold's gone, euro dollar's gone, pound dollar's gone. I think that there's probably just better opportunities, actually. So we might catch, back to gold, actually, we might catch a bit of a sort of mean reversion idea. So given what we've had over the past, 2 weeks now, with obviously dollar strength on the back of wash and very good fundamental data as well for the dollar. Now that's deteriorating a little bit with the weaker labor data we've had today. Not fantastic situation for the dollar. I'm fairly sure PMI, manufacturing PMIs were weaker yesterday as well. I might be mistaken, but from what I remember, it wasn't looking great. So there's 2 situations in my book. Either the dollar just completely rejects this level. You know, this is a really nice sort of break and retest if we do have that rejection. Or what I also think is actually more possible at this point is actually lower on the dollar. Maybe not all the way back down to the support level, but I'm really not that interested in being a buyer at this time. I think that period is kind of gone until we get something to reignite it. So something to consider is the fact that we've had, you know, again, wash and good US data. The markets have been pricing in these rate hikes for the dollar, by the Fed, sorry. But now we've had negative data come in. It's actually very plausible that the markets start repricing a little bit and pricing out some of the hikes that we've been expecting, as well as obviously lower oil prices. So yeah, I just don't think right now is the time to be buying the dollar, in my personal opinion. So that again leaves me in a situation where I do think maybe gold longs could be worth an attempt, because you've got to think about it like this. If it doesn't work, my stop loss, I will say, will be here. So yeah, I'll take a loss, but it'll be what, 1%, maybe 2%, depends on how risky I'm feeling at the time I execute the trade. But then the upside essentially is unlimited. I want to say unlimited. Obviously, I don't mean that too literally, but there is potential. Gold could go to 6,000, 7,000, depending on how long you hold it and how the fundamentals and the overall landscape develops. So I wouldn't mind taking a 1% risk with, you know, against this lower time frame trades lower time frame trends like the H4 and the daily, to potentially catch, you know, like a 1 to 5, 1 to 6, 1 to 7, maybe more. So it's about the risk to reward. I think the risk in this case is worth the potential reward. And again, if it doesn't work, it doesn't work. It's all good. Yeah, no, I know you're replying to Sluggy. I'm just trying to get involved. I'm just the guy at the, the guy trying to budge my way in the conversation. Don't mind me. Fat Tony, hello. Backtested retail positioning and SA thoroughly. SA, what's that? I use it from time to time in my trading. SA. Am I being silly? What's SA? But yeah. Oh, sentiment analysis. I would assume. Yeah, I think COT, there is a specific way to trade COT actually. I don't do it, but there is quite a good way of doing it where you trade what we call a COT flip or a COT flip. So it's when, in fact, we saw it on the euro. We saw it in leveraged funds COT. I'm not sure if we saw it on non-commercial, but we can have a quick look actually. But it works really well. So you basically look at net positioning, and when it flips one way to another way, it's normally for a reason. COT net positioning doesn't just flip bullish and bearish, randomly. It's normally because something has changed to drive a sentiment change within the market, within smart money and institutions. So like here, for example, it didn't really lead into much actually. So this is probably not a great example, but if you really look into COT flips, when net positioning flips from one direction to the other, it can often be a good trend indicator, especially if you pair it with another one, another currency, obviously, that's doing the same thing, or actually doing the opposite thing. So if one currency flips from bullish to bearish and the other one flips from bearish to bullish, it can be very nice, but it's not a frequent thing. It's a very slow type of thing. Obviously, it's delayed by 7 days. So yeah, I like COT, but not, again, it's like one level above retail position in my book. It's good, but it's more just a little confluence rather than a driver of a trade. There is differences between COT data. You got non-commercials, you've got leveraged funds. There's quite a few other ones, but leveraged funds is a bit more similar to retail swing trading. It's leveraged, and yes, it's shorter term, so it gives, personally, it's the one I like to pay attention to. But I think non-commercials are more important in terms of longer term direction. So it really depends. Again, it comes down to the way you trade it. It's all individual and unique. So it doesn't mean one is right or anything like that. Anyway, I'm kind of rambling because I'll be honest, I've got nothing to cover. I've got absolutely nothing to talk about. So Euro Swiss, Euro Swiss I'm out of, DAX I'm out of, Euro Dollar I'm waiting. There's nothing going on here. I've got nothing that I want to trade right now. So Nasdaq is just stuck sideways. I might want to be a buyer, but again, there's no direction. As a trend follower, can't get involved here. S&P, exactly the same thing. The Nikkei, actually, I do want to buy. I wouldn't mind being a buyer of the Nikkei, but I have to see this gap get filled. I've attempted twice to be involved. So I took one trade here that was break even. I took another entry here, and then basically round tripped this bullish move here and got stopped at break even. So I took two trades trying to get long, and neither worked out. So I'm not going to do it again. I've given it 2 attempts. That's the limit. I'm not allowing it more. So the only way I can get back in is if we come towards the 200, fill the gap, pull into the fib right here, and then we have a lift off, and that will be the entry. But yeah, for now, there is nothing. Excuse me. White 4. I've got no idea what you mean, Don von D. Newt. That's an interesting name. Thank you. I agree they might be forced to cut. I don't think we're going to see the Fed cut. I was saying I don't think, I think we might see a little bit of the hiking get priced out that we were seeing. I still don't think the Fed is in a position to cut rates. So inflation is still sticky. Growth has been quite good here at 2.1. Obviously, forecast was 1.6. Yes, we had a little bit of a dismal labor data report. ADP came down, NFP came down. I was mistaken earlier. I did think that PMIs came down. Oh, sorry, no, I'm not. They did come down. I was right, actually. So yeah, PMI, manufacturing PMI specifically came down a little bit. So yes, we've had, again, not favorable data come out this week, but I don't think it's detrimental enough to warrant the Fed now pivoting dovish. Although we have seen, was it Hassett and I don't think it was Warsh, but we saw, I think it was Hassett and maybe one other person come out and say that rate hikes just aren't warranted right now. So we'll see what happens. But also Hassett did say he was expecting very strong jobs data, which obviously didn't happen. So do you want to pay attention? Not many new opportunities. Yeah, that's exactly it. So I think today and tomorrow it's more just to sit back, relax, collect your thoughts, and then we can come back next week and see what's going on. I'd rather wait than overtrade. Yes, absolutely. What's thoughts on BTC? I don't have any thoughts actually. So previously I was okay taking a bit more of a bullish lean because we did have Bitcoin reading bullish on the Edge Finder. But right now, there is nothing, absolutely nothing to do here. So I think it depends, really. If you are bullish on Bitcoin, there's some people that say Bitcoin is worthless. There's some people that are perma bulls. It really depends what stance you take. I don't really lean either side. So I think it's more of a case of, bullish and bearish outlooks. I think we've got a very good bullish outlook here, or a very good bullish case with this weekly level of support. Very easily could continue higher from this point. However, saying that, it's a very obvious level in the market. So it wouldn't be a huge shock to me, actually, if we break down and start heading towards 50K and then 45K from that point. It's very possible. Because Bitcoin isn't something I trade, I really don't like to sit here and try and give my directional bias, because first of all, I don't have one, but also I don't know this market enough to morally really give you anything. Does that make sense? I think, when I sit and try and give you analysis and thoughts, it's always, or I try my best to make it all understandable and based on real facts and real data. I just can't do that with Bitcoin. I don't know it enough, so I don't want to mislead anyone. But yeah, in terms of technicals alone, I think being a buyer at this level makes sense. But what do I know? So there you go. Argentina victory will crash the markets. Do you mean the World Cup? Also, I didn't know England was playing last night in Atlanta, Georgia. And I heard it and I was like, oh, I wonder if Nick's watching. Probably not. But I was like, I've never heard of that location outside of Nick, and I heard it on television last night. What's my take on Euro? I think the Euro is pretty flat. I don't think it's strong. I wouldn't also say it's very weak. I think it's more in a case really of it's a good proxy currency right now. So let's say there was a super dominant currency. I think it would be good to trade against the Euro, or a super bearish currency. I think it'd be good to trade against the Euro. Euro itself, I don't think really has much going for it right now. So I think the ECB, again, isn't doing much. I would say they're pretty neutral right now. I'm not expecting them to hike, but I'm also not really expecting any cuts right now anyway. We can see on the Edge Finder here, it's only 57%. We've got three bearish and 4 bullish readings. So there's just no large driver, in my opinion. So the Euro, I would say neutral. So that's the situation right now. Perma bear, what, on Bitcoin sluggy? Yeah, that's the thing. I actually don't like Bitcoin. I mean, I've said this, I think, all week, actually. I just don't see the use case for an average person. But the problem with that is I don't, as a trader, I obviously have to pay attention to what the market is saying. And in Bitcoin's case, it's a very valuable asset, if that's what you want to call it. So if I was, taking that bearish stance up until like today, I would have been very, very wrong. So I just don't think it's worth me really being involved. Yes, excuse me, I can have a personal opinion, but then you've also got to have the trader's view, and both of those collide. So when's a new currency dropping? I don't know, Sluggy. When I decide to buy an island, I might make my own currency and list it. It'll probably be the most valueless, worthless currency on the planet, but I'll try and make sure the swaps are good for us. I'll put my interest rates at 10% or something. Actually, no, probably not. That wouldn't work. But anyway, you get the idea. 2-0. It wasn't 2-0. It was 2-1. I'm saying this like I know football. I don't know anything about football, but yeah, I watched it. We were against Congo, and Congo was winning. I was like, how's Congo winning? I was looking at the Congo team. There's like no one on their team that was born in Congo. I don't really know how football works, but I thought that the World Cup, you play for the country you're from. There was people, there was all sorts of people, and I was like, they're not from Congo. Why are they playing for? There was a British guy that plays for a British team, and he's playing for Congo. It just didn't make sense to me. This is just ridiculous. But again, I don't know anything about football, so maybe I'm mistaken. Anyway, let's get back on topic. Hey, James, thoughts on Euro Pound finally breaking the support? Well, this goes back to what I was saying. I think the Euro is pretty neutral right now. I wonder what's caused this move. Interesting. I don't think I've missed anything, have I? But yeah, this doesn't look like a normal move unless it was just the fact that we've been accumulating for so long. We finally broke the level. Maybe it was just an influx of or an inflow of volatility and liquidity at that point. Maybe, I don't know. But either way, the problem I've got with euro pound is I do kind of want to see it go lower and just continue its behavior. This is a very mean reverted market. So if you look at the way it moves, it's typically, we'll have these bullish periods and then we'll correct pretty quickly and then we'll just continue lower, and then another bullish spike and then we just continue lower, and then, bullish spike, reversion, and it kind of just follows the same behavior. And typically it does just trend lower over time. So if you look, let's actually go to the weekly time frame. Oops. You can see, actually, that doesn't prove my point very well. But anyway, it's a market that I typically would like to short on spikes because it's just not something that really does anything. Moves up, moves down, moves up, moves down. So I would expect it to just basically continue. So it moves up and then the move down. So very basic sort of trading behavior 101. On the other hand, I really don't like the pound, and I wouldn't really want to buy the pound against the euro. So that puts me in a very tricky position because I would be a short seller. But then again, it's just that thing of I just don't want to be a holder of the pound. So, excuse me. If we put my personal bias aside, though, I think what the most sensible idea would be is basically looking for a continuation. So we've broken a pretty major level of support. Then it would be a case of fib from the high to the low. That lines up, actually, the sort of 61.8% level lines up really nicely within the support. So that would provide break right here. Look for the retest into the fib and then a continuation lower from that point. Again, very simple sort of technical break and retest entry. But I don't think there's anything to really warrant that on Edgefinder. But let's see. Oops. EUR, GBP, there we go. I suppose it's -2, so there is maybe a slight lean towards the bearish side, but again, for me, not good enough. So yeah, I do apologize. I've taken a very boring segment today in terms of I just don't have anything to talk about. There is nothing at all that I'm interested in trading. So I really can't sit here and give you much information. Make it tradable? Oh, absolutely. Let's take an Australian dollar. Exactly the same thing. Completely neutral on the Australian dollar as well. There is nothing. So the RBA, I think I say this every time we talk about the Australian dollar, but the RBA had its time, or the Australian dollar had its time. So we had the RBA hike rates 3 times. It was the most hawkish central bank at the time earlier this year. All we had to do was buy the AUD. Very simple and straightforward. That dynamic has now changed. The Australian fundamentals are definitely not what they were. The RBA is now back on pause. And we did see a large inflow on COT during that period as well. So I think we've obviously seen the fundamentals flatten out. We've seen the RBA go back on neutral stance. We've seen COT positioning unwinding a little bit. So I just don't have anything that warrants me trading the Australian dollar. There's just nothing for me. Congo won just by qualifying for the World Cup. Yeah, maybe. 2-1. Yeah, it was quite a good game, actually. Like I said, I don't like football. It's not my thing, but it was quite entertaining. Euro pound both weak fundamentally, but euro seems weaker longer term. I've got to disagree, Sluggy. I can't get behind that. See, we're slamming GBP. Yeah, I know, it's my thing. We've got to dunk on the pound at least once every segment. Rip the Edgefinder top setups. Yeah, I know. Hopefully we get something come back, because otherwise it's going to be a very boring weekend. I'll have to make my Sunday video and just it'll be like 2 minutes. Like, hey guys, nothing to do this week. See you later. Thanks for watching. Stay safe. Don't get margin called.
If you were a swing,
oh, scared me then. I guess someone was listening to my don't get margin called and got trigger happy. What was I saying? Oh, how about Swiss? So Swiss is actually neutral, but in a good way. It's not, I don't really have anything. So I like to use a Swiss as what I call a proxy currency. So although I don't have anything really particular on the Swiss, I think it's good really to benefit from swaps or trends. So actually, I think we do have Euro Swiss reading bearish. Literally what happened. Sorry, that was my bad. I'll keep my ending quotes to the end. So Euro Swiss is reading bearish. So I think we could prioritize that market right now. So although I actually got wiped on Euro Swiss, I do quite like the short idea. The problem is it's expensive. So, you know, Pound Swiss, Euro Swiss, it's just, they're not good markets to hold short because they do cost line swaps. But if you can hold them long enough, they do work out historically. You know, very bearish market overall on higher timeframes. So I think what a good approach here would be, is waiting for the low to get confirmed. So when I say confirmed, I mean, you know, when we start coming back up, once we, you know, confirm some sort of lower low, then take the fib from the high to the low, wherever that will be. Let's just hypothetically say here. Then I'll wait for a pullback into the fib, wait for these moving averages to start changing trends, then look for continuation lower. Again, very basic bread and butter type of trading, but I can't do it right now because, again, I need to wait for that low to get printed, which will probably happen today or tomorrow, maybe next week early. But yeah, we'll see. So Euro Swiss, I think bearish, but the Swiss itself, I don't have really any specific thoughts or analysis on it. It's just following trends with the Swiss, really. It's a very reliable currency, if you will. Anyway, ladies and gentlemen, we have, let me just double check. I'm fairly sure it's Tiger, but let me make sure. Yes, we've got Tiger coming to take over the show. So don't go anywhere. You're in great hands with Tiger. Fantastic guy. Ladies and gentlemen, I'll see you all tomorrow. Enjoy the rest of your days. Stay safe and don't get margin called. And James, whoever's running the show, feel free to cut to the ad now.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Thursday. Are we having fun yet today? In light of all this negative data we've had in the U.S. lately? Well, it's completely flipped the dollar on its head a little bit. Let's just go take a little trip down memory lane, shall we? Obviously, we did have the miss yesterday on the manufacturing PMI data by 0.5 points. Still comfortably in the expansionary territory, but it was a miss nevertheless. You did also have, obviously, today's unemployment rate, which beat. But, yeah, definitely the non-farm just shredded things to bits today. Like Nick said brilliantly whenever the data come out this morning, we obviously had a revision on the data from about, 40-something thousand downwards. So that in itself is not a good look. But then you factor in the miss by half on the actual versus forecast for today, and it's just a little bit ugly out there. So let's go take a look at the updated economic heat map for the dollar, and you can see we are all the way down. Remember, the dollar and the yen were both partying up in the sky, but it's dropped about 30%. I do believe this is all the way updated at this point. Yeah, July 2nd. Okay, and then July 2nd. So, yeah, currently at 70%. Still strong overall from a fundamental perspective, but it's definitely thrown a dent in all of our dollar pairs, not surprisingly. So where's the dollar? It's nowhere to be found unless you're trading dollar futures, and then it's just barely tall enough to ride the roller coaster. +5, Dow +5 still. Pound yen, I got to agree with some of the other guys that were speaking earlier. I don't like it. I don't really like the thought of buying that one personally, not when you have a strong yen and you're trying to sell it in this pair. And then the pound just is really kind of underwhelming as far as I'm concerned. I still don't quite understand how in the world it's on the bullish list when we're getting this look where the pound is only at 40% from a fundamental perspective. And then the yen is still up there in second now. Okay, so Canada actually blitzed past it. So, yeah, as far as that
that one there, just on a fundamental level by itself, I'm just not too thrilled with. CAD yen, although CAD we just saw is now the strongest currency, quote unquote, from the fundamental side of things. Same thing. It's being paired with a very strong yen. So I just don't really like that idea. I don't personally trade dollar futures. Dow, I'm still waiting on a retracement down to a zone of demand. I don't think we're too far. We'll definitely take a look at that chart here in a second. Obviously, we lost gold from the list, which is a little bit disappointing. Euro dollar is off the list. That's disappointing because it's inside of a supply zone that I was considering shorting from this time yesterday before this data came out. And then, yeah, Kiwi Swiss, Aussie Swiss, Euro Swiss. That's just some of those Swiss pairs that are just kind of ugly. I showed you guys how there's wicks everywhere, wicks and bodies everywhere on some of these pairs. It just makes it a little more difficult with the way I trade supply and demand to find clean zones. So I'm right there with you, James. I've got nothing going on today either. I'll put on a wig, a dress or something, dance around, entertain you guys some way, shape, or form. So on that note, go ahead and let me know if you guys do have any specific tickers. And if not, we'll definitely go through some of these setups and some of the major pairs anyway, just to see, kind of get a little bit caught up on some of the zones that I'm after. So I think I will start with, until I see you guys pop anything on the list there, I'll start with the Dow since it is still on the list over here. Let's see, I'm on the wrong one. I need to go to the CFD. Where are you at, CFD? There you are. Dow CFD over here. Look, this thing's just continuing to fly towards the moon. Okay. It's not quite bypassing and going to Saturn just yet, but it is on its way for sure. And I still maintain that zone all the way down here at the $50,400 level is probably still my favorite. If we're just looking at swing low, swing high, that's obviously as close to the origin of that up move as it can be. So that still remains it. Now, just kind of coming in a little closer to home, I got to admit, I am keeping a little bit of an eye on this 4-hour zone right here that got created basically the first 4 hours of the U.S. session, okay, the midnight to 4 a.m., that candle. I am keeping a little bit of an eye on it because if I do drill down a little deeper from 4 hour to 1 hour, we are getting just a little bit of a 1 hour separation. It's not a lot, and I'm really grasping at straws here. But there is a 1 hour candle with a very, very tiny gap. If we ignore the leg out, going to the second candle, the bottom of that wick right there, there is by definition a tiny gap. But honestly, guys, that's really not enough to get me out of bed and get me excited. That's one thing. The other thing is there's no volume, which you guys know if there's no volume, there's no trade for me. The volume doesn't start until we start getting to these last 3 candles on the up move. But which from the 4 hour chart, as you can see, the 4 hour box that I've drawn up, a rectangle, that basically starts where the volume slowly starts kicking in. So I don't know. This is obviously the basing structure before this up move. We did break this structure over here, but we haven't really closed above it, even on a 1 hour chart. And I have to see a close above this point before I even get creative and try to find a trade in this area. So not even going to fool with writing up a alert just yet. Really not until we get a close somewhere above that white line at absolute minimum. And then maybe we could take a little bit of a risk off of this first leg out candle where the volume really starts picking up. But can you guys see here? See what I'm doing? I'm basically grasping at straws. And if I'm grasping at straws, probably the safest thing to do is just sit on my hands on this. If we drop it down even deeper to a 30-minute, okay, that is where some volume starts, but it's still really this leg out candle here. So maybe we could look at this as a little bit of a 30-minute zone right here. I'll just draw that up here just for a visual sake, but that would be kind of a 30, but now we're starting to get into a $40 range on a $52,000 instrument. I don't know that that's a very strong zone, but by definition, it is one because we have a gap and we have some volume starting to pick up, obviously because of that NFP report we had. So I say all that to say that is a zone, but I had to cross my eyes and squint really hard just to find it. So probably the safest thing to do for me is just sit on my hands. Just ignore it. But again, it's the only it's one of the main items on the bullish list, and that's why I was trying to give it some time of day. So probably going to ignore that, guys. Let's get into some of these major pairs, and I'll take a look at gold and silver as well, because you know, silver is on the list, but I'm kind of like what James said. If I wanted to short anything, it would be gold. We are obviously starting to get up here to that 4-hour daily confluence. We've actually pierced the daily. You guys know me. I need 2 sets of eyeballs. So I'm still kind of waiting on this 4-hour zone up here. Hopefully it doesn't hit today or tomorrow, because obviously we got some closed markets tomorrow. We still have currencies. We still have crypto, but it's likely to be, you know, a little thinner on the liquidity. So I don't know that getting into a short up here is the greatest of ideas, considering we're going into the weekend. And you all know what President Trump and Iran like to do on the weekends. They like to fight like an old married couple, and then kiss and make up and make things look halfway rosy by the time Monday rolls around and we think we're back in good hands again. So I don't want to fool with that either. Hopefully this doesn't hit until Sunday night, Monday here in the States, Monday morning, where the liquidity can start bouncing in. And that's just from a technical level, because again, we've lost it on the edge finder. Okay, if I actually, let me just do this. Go back to the top setups, and I'll just add in the neutrals here just to get a real-time look on where gold is at. And gold is, so it's a -4, okay? So it's not quite tall enough to ride the roller coaster just yet. It's missing by a point. But if it grows an inch, okay, perhaps it'll pop on the bearish list. We don't know until Monday, because what's Monday? Well, Monday, if we're just kind of skipping ahead a little bit, is the services sector. So we got a bearish manufacturing sector report, okay, for PMI data. And then on Monday is the services. So that's really the first higher impact red folder event that we're going to see. And perhaps if we get a really strong report for the dollar here, perhaps that could have a little bit of bearish impact on the gold. But we already know the previous services report was already bullish, so it's not really going to affect the. It's not really going to help the dollar from a percentage perspective, but it can definitely hurt it, especially if it misses like the manufacturing did. So we'll just see how that all rules out. That right there might hinge on me, possibly getting into a short right there at that 4,200 area. And I know Nick was talking about this same zone on his video yesterday. Guys, if you're not, definitely check out his daily videos. He usually puts them out about an hour or 2 or 3 or so after the show's ends, kind of covering the topics du jour. That's where I get a lot of my information, just at, as far as just continued education on the macro side of things and how the puzzle of markets all works together. But yeah, he was talking about this same 4,200 area that I'm looking at. It's, just for a little different reason. So I'm looking at it from a daily 4-hour perspective. And again, if we get a nice bullish report on Monday, this might come into play. Even if it stays at -4, maybe I could take advantage of that one report, strong dollar, which would be bearish gold. So we'll see how that all works out. Nothing I can do today on that, obviously. Take a look over here. Dixie Falls, pound dollar. Yeah, pound dollar, Andrea. Yeah, let's look at that. Let's go ahead and swap on over here to the majors real quick. And I'll just go in order. I got the 7 majors at the top of this list here. Aussie dollar's been fighting that demand zone. I've been telling you guys about it. Looks like it's trying to peak up a little bit. Really didn't get the strongest of reactions like some of the other currency pairs did. In fact, let's just flip on over here to the dollar pairs by itself. How about that? So this is a 5-minute chart, guys, of just the majors. Dollar is the quote currency on the top 4. Dollar is the base currency, bottom left 3, and your Dixie over here on the right. So you can see how ugly that report was for the Dixie. It just looked at the good positive unemployment rate and said, I don't care. Between the revision, between having the forecast, it was just hideous. It was ugly. So it seems like it's trying to base out somewhat. But yeah, it's just kind of a scary place to be right now, trying to take advantage of the dollar. But since you did bring up pound dollar, let's go on over to that one. And then we'll look at euro dollar as well. So your pound dollar. Okay. So as you can see, just like a hot knife through butter, when that report came out, it completely did not care what supply zones I drew up here, what I drew up here. But again, those were a little bit more on the minor side because there's really no confluence around them, no daily, no higher time frame confluence. Not until we get up here to the one that we're almost getting ready to touch now. So this is our daily supply. Talking about this fat doji candle here before the big, strong, ugly drop with gaps, with the volume picking up, et cetera, et cetera. So for me, because of this report, yeah, that's absolutely, even if we had not yet chewed through these zones, I still would have definitely ignored them because of all the volume coming in, okay, because of all the volatility that the dollar is seeing. So perhaps we still have a technical setup up here, but at this point, even on a 4-hour chart, there are a couple things on this. Couple things. So number one, what's the alligator's mouth doing on the daily over here? Okay, open. Uh-oh, it's closing up. Okay, the 8 is closing back in on the 21 EMA. So when the alligator closes his mouth, whether it's up or down, that's just a spot to hesitate because it's a higher time frame saying, hey, we're trying to turn around here. It's not completely done yet because we still have a daily zone to fight. But I don't like that picture just by itself on the daily. And then we get over here to the action time frame on a 4-hour. And I do 1 hour. 1 hour is typically where I look at my 50-200 relationship. But even if I go up to a 4-hour, you can see the same thing is happening. Okay, the 50 is closing in back in on the 200. And we've pierced the 200. And it's just trying not to look back. So needless to say, we dropped to a 1 hour. Now the alligator's mouth is opening to the upside. I don't like that. Okay, I don't like that at all. EMAs aren't helping me. They're not being my friend right now. The 1 hour chart and really even the 4-hour chart is giving me a new series of higher highs and higher lows on the pound dollar. So I don't like it. Remember, I really liked this zone confluence when price was still down in this area. That's when I drew this up. But now that we've had all this kind of sideways nonsense for a minute, and then we start having a week plus of higher highs and higher lows, well, that's just a little scarier to try to short because now I'm pretty much trying to stop a rocket ship. Okay, it's the opposite of catching a falling knife on the action time frame. We have to get a temporary counter trend. As a supply and demand trader, we have to get a temporary counter trend on our action time frame, right? That's just the way it has to work. We have to have price retrace back up to our zone. So, yeah, by definition, that is a counter trend trade on the action time frame. But when the daily is starting to threaten the same thing, that's when I skip that, guys. That's when I ignore it. So I don't like it. At this point, literally the only thing I have is the zones themselves. And that's not enough. Okay. As much as you guys know that I love supply and demand, that's not the end be all. I still have to have some odds enhancers to support that. And I just don't have any odds enhancers supporting that supply zone right there. So definitely going to skip that. And let's go have a look at euro dollar. Euro dollar. Yeah, this one was still relatively okay as far as the EMA structure, the alligator's mouth to the downside. But obviously we've dropped off the list. I mean, euro dollar is down or up to -3. So it's way too small for this ride. And we are now in that supply zone structure that I've been kind of talking about for the last week or so. We broke this triple top here. We tapped into this liquidity here. We've tapped into the unfilled orders. But it's a pretty scary place to want to short when the dollar is getting totally smashed right now, right? So it's ignoring it. Gonna ignore it. Not only because it fell off the edge finder, but the dollar has just gotten a little bit weaker relative to the euro. Now it's still stronger than the euro because the euro is 57%, but that's not enough separation for me from a fundamental standpoint. So it's a very creative way of telling you guys I'm not interested. Okay, not interested in it. Kiwi dollar, obviously it's off the list as well. It is getting close to a more minor supply zone, but obviously going to ignore that. I do have I think a better structure a little higher up on the curve. Swing high, swing low. This is clearly in the top third or the premium area. So we'd probably just completely ignore this zone altogether. Just let it pass on through and see what the data brings us next week to see if it can strengthen the dollar anymore. Dollar CAD chewing through the overhead supply, the daily. So would have no interest in that anyway. But yeah, it's off the bullish list. Do still have this daily zone down here, and we'll just let it be and see what next week brings us on the data front. Dollar Swiss, kind of a similar picture, although over here we did break that more recent higher time frame supply. So I still think there's probably going to be some type of underlying strength down here, but I have not got a fundamental reason or a sentiment confirmation to trade it. Okay, so yeah, same thing with all the dollar pairs. Finally, the dollar yen. Oh, the dollar yen. It's on the radars of everybody throughout the world. The intervention traders, the traders that are following the data. Big civil war going on right now. Well, this morning we did have, from what it appears to me, and obviously here's the NFP data that came out at 8:30 Eastern. But if we go a little further back, I don't know, you guys tell me, does this feel like a little bit of suspected intervention? Just a little bit? What do you guys think? I don't know the answer, but all I know is it dropped 100 pips in about 2 minutes. So you tell me, is the Bank of Japan just continuing to get desperate and trying to, at all costs, increase the value of the yen? I can tell you who's probably really happy with the very bad NFP report. Probably the Bank of Japan. Okay, the report's doing their job. That's probably a lot of money they're saving at the moment on trying to intervene with their currency just because of how horrible of a report we had. So Bank of Japan, they're probably lighting up their stogies. They're getting their sake bombs ready to roll. Okay, they're going to have a good weekend. And then we'll see what kind of worries they walk back into come this next session, this next week. So yeah, it's obviously off the list as well. Now and obviously it chewed through that zone I was telling you guys I was paying attention to for a while. But yeah, when that report comes out, all bets are off on this. So good stuff. We can ignore that zone right there. We are obviously back below the 1986 price points. And I still do want to keep an eye on this zone down here to the bottom left, which I do believe that was a 4-hour. Yeah. So I still want to keep an eye on this just from a technical standpoint. I think that's still a pretty good retracement. I mean, we're talking, how many pips is that from the high right there? It's basically about 250 pip retracement. Could this demand possibly come into play? Okay, this is the one I've been watching for a while. And I told you guys I would have had zero interest in trading this until we broke and closed into 1986 territory. And that's finally what we got back on Monday towards the end of the intraday session. So, and then it continued to go up. I told you guys how this, the candles, especially on a 2-hour chart, the bodies of the candles kept closing higher and higher and higher and higher. So it looked like a really good momentum play for a while until the Bank of Japan looks like likely stepped in for some intervention, and then obviously the NFP report. So yeah, obviously we don't have it on the bullish list right now for dollar yen. Let's go double check. Yeah, +2. This thing is just cratered, and it was at it's lost 1 point today. It lost some points yesterday as well after the manufacturing PMI data came out. So it's just giving us a little case of slim pickings, ladies and gents. Again, we're just down to 7 items plus the dollar index. Yeah, dollar index. So that's kind of where we're at. Take a look over here at the chat, see what you guys are rapping about over here. Oh, you want to see the neutral list? Yeah. Yeah, that's basically what I have here. As far as items that are close, obviously the FTSE that James was talking about earlier, that's the one I made some money on last week. Pound Aussie, DAX had a pretty good drop back to neutral. The Swiss yen is pretty close. So these are the items to kind of keep an eye on going into the next week and see if we happen to get any. Just 1 point of bullishness is all we really need to start putting our eyeballs back on those 4 items specifically. And then obviously if we drop down to the bearish side of things, Nikkei, gold, which I hope gold can go back to bearish because I really would like to take advantage of that. But Nikkei, gold, copper, if there's any copper traders out there, is pretty close. But yeah, right now it's just silver and some of the Swiss pairs. That's basically it. Some of these fell hard. Again, euro dollar that I was wanting to watch gained 4 points of strength all the way to -3. And CAD Swiss, holy cow, 5 points. Yeah, this is a really cool item that Nick and company had. I think James influenced this, but just seeing what the 1 day change is, just to be able to get an idea of how far from grace some of these assets can fall, guys. What are your thoughts on UJ? Do you think it will continue to bleed? Oh yeah, the one I was just talking about. So dollar yen, it's neutral as far as I'm concerned. The NFP is one of those account killers. Guys, when it comes to the economic calendar, we've got red folder events, and then I think we've got purple folder events. So I think NFP is one of those purple folders, meaning it's very red, okay? Again, I've said this before, but guys, you can go on to YouTube and just type in NFP fails or NFP blown accounts, and there's video after video of people trying to front run this thing right before or right during the report, only to blow their accounts in microseconds. So I think it could have some spillover into tomorrow. Now, tomorrow's a thinner day. We got the holiday coming up on Saturday. It's our Independence Day. It's our 250th birthday here in the U.S., guys. So that'll be Saturday, but apparently we're celebrating it on Friday too. So, which I'm fine with, because Independence Day, for whatever reason here in the States, it seems to always want to fall on a random Tuesday or a Wednesday. Like it never falls on the weekend where we can actually enjoy it, like, really enjoy it without having to work the next day. So yeah, it's just kind of nice to have it on an actual Saturday, but it's a big one. It's a big one for our country here, 250 years. So, but anyway, yeah, tomorrow, some of the markets will be closed. Again, whatever is open is probably going to have some thin liquidity. Everybody's going to be out here barbecuing, drinking beer, blowing their fingers off, fireworks, whatever the case is. So it's going to be a pretty busy day. I'll still be doing some content stuff for my other project I'm working on, but no live streams over there. So it should just be about you guys. I do believe we are streaming tomorrow, right? No, we are off tomorrow. Okay. I just wanted to make sure. So yeah, no live streams tomorrow, guys, just so that you know. We'll be back on Monday, obviously, bright and early after I end the show for the week. So let's see here. Dixie Falls. Yeah, I showed the neutral list there. Let's see. I've went through the majors. I've went through gold and silver. Oil is getting close to touching that zone I kind of projected. Okay, the pre-war daily demand that I was telling you guys about. We had to break through this weak 4-hour zone first. Okay, this was back middle of June, and then we're getting close. We're getting close to touching it. Now, again, I can't emphasize this enough. Once we hit there, and obviously we're at neutral right now on oil anyway, but for a while we did have a bullish bias on the edge finder. Well, even if we had it, I still need to see that series of higher highs and higher lows kind of come into fruition. For WTI, the Brent side of things is currently chewing through that zone, though. So it's going to be interesting going into next week to see if we do get that final drop into daily demand here and start getting a little bit of a push up. So far, not really a whole lot of anything on the Brent side over here, Brent oil, Brent crude. And then again, oil is just about through. It's pretty much closed the gap that we had over here. Just a little bit more. And I'm very interested to see if we do get a little bit of a push up just from a technical view, okay, a technical perspective. Again, we don't really have anything on oil at the moment. -2. And yeah, Bitcoin is straight up neutral. So it's just one of those days, ladies and gents. It might be a good day to sit on your hands, maybe go do a little back testing, and try to improve your craft. Look, you can learn the basics of trading fairly quick, but it's days like today where you really want to go get good at the nuances. Okay, the word nuance. There's a lot of nuance in trading. Perhaps it's reading one of the books that we've been talking about over the last couple of weeks, or whatever. Okay, or maybe if you're a stock trader, maybe there's some better opportunities over there. From an edge finder perspective, from a supply and demand perspective, and just listening to the rest of the guys, there's just not a whole lot of opportunities right now. So that's really my next thought, is just waiting on the PMI data coming up on Monday. to see if that could maybe help us out on something like a gold short again. We do have minutes coming up as well. Kevin Walsh, probably some lip flapping session going on with that. Unemployment claims, and that's it. It's a very thin week next week. It's obviously right after a holiday week. Some lip flapping sessions with Governor Bailey. I think tomorrow we've got some lip flapping, more Lagarde and Governor Bailey talking. I watched their speech that they gave yesterday. Governor Bailey, Christine Lagarde, ECB president, Governor Tiff Macklem of Canada, and Kevin Walsh. And they seem to be pretty well on the same page, guys. Very data dependent, obviously getting away from the forward guidance into more of if you listen to Christine Lagarde talk about it, more of oh my gosh, what was the word she used? Some other type of guidance, framework guidance is what it was. So it sounds to me like, after watching, and I'll end it on this because I know my time is up, but after watching them speak at the Central Portugal ECB forum, they seem to sound like they're pretty well on the same page. And like what one country does, what we do, what the ECB does, they're going to kind of share their knowledge with the other people in the group, talking about the other central bankers, and just kind of fight this whole thing that we're going through right now as a world, as far as the inflation and the fallout from the wars and planned cleanup, supply shocks, geopolitics, all that. It sounds to me like they're in lockstep with each other. And I got to say, just to finish on that, I think that was a pretty good sign. It didn't sound like they were just like off doing their own thing. They're not going to share their benefits or whatever. So I don't know. I just thought that was pretty cool to watch. It's pretty nerdy stuff. It's like watching paint dry or grass grow. But if you guys ever get a chance to listen to some of these central bankers speak, especially when they're all in the same panel, it's some pretty good stuff, especially when you want to get really deep into the macro, and it's just like going to school. I mean, it'll help you to be a better trader tomorrow and thereafter. So anyway, ladies and gents, I'm done rambling. We'll be back on Monday. Please have a safe, for those of you here in the U.S., please have a safe weekend. Come back with all your fingers. You got to have a finger to mash the buy or sell button next week. So don't lose it. And take care. Stay safe. We'll talk to you guys next week.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.